we enjoyed before. A recovery in growth does not mean a recovery from levels. We would start that growth from a very, very depressed level, 10, 15, 20% lower than where we were before. And even if we recover faster than we were going before, it'll take 3, 4, 5, 6 years to catch up to where we were before. So a V-shaped recovery is, a nice turn of words, but it's not necessarily a prediction of a return to prosperity. We can't expect to get back to where we were for at least the next several years.
So, Carl, it seems like an odd time. I'm looking at a story on the Bloomberg today. The U.S. plans a broader reset of its WTO tariff commitments here. Looks like the White House is trying to renegotiate some of these tariffs here. Is this the right time to be doing that, do you think?
Heck, Paul, this is never the right time to be tearing down the world globalization progress. The United States has complaints that our tariffs are lower than the tariffs of our trading partners. That's the gist of it. And when you're in that situation, you can do three things, all right? Number one, you can do what the Trump administration is doing, which is you can raise your tariffs to match the rest of the world, and that creates a loss. Number two, you can work through organizations like the WTO to try to collectively bring down tariffs where they're too high. That's what we've been doing in the post-World War II period, using the WTO to achieve massive reductions in tariffs around the world. And it's worked, and I don't see why it can't work in the future unless the WTO is taken apart. And then the third thing you can do is you can do nothing and accept that your tariffs are lower than everybody else's and use economic influence, the fact that you're giving other countries an advantage to get into the U.S. market, as a way to to influence political decisions elsewhere, which is the oldest diplomatic game in the world, using economic policy to achieve political influence. But you don't have to raise tariffs in the U.S. in order to level the playing field. That's just the tactic that the Trump administration has chosen. And personally, we at High Frequency Economics don't agree with it.
Carl, how much are you thinking about the next election and how it changes the arithmetic? Because if there were to be changes in personnel, some of these conversations would have to start from scratch, right?
Yes, the conversations would be different under a different administration. I'm not even going to begin to speculate about what happens with the next administration. As far as I'm concerned, we're pretty much out of time to do a lot of things between now and the election in terms of, broad economic policy and trade policy. So I'm watching to see what happens, but there will be a different conversation with a different president.
Carl, thank you as always. As Carl says, we will not get back to where we were for at least the next several years. Chilling words from Carl Weinberg there of High Frequency Economics. This is Bloomberg.
At the start of every day, you can...
At Halfords, we're here to get you where you want to be. We can replace your battery at over 700 stores and garages, or even at your home or work with our mobile experts, so you can enjoy an engine that starts first time, every time, and start enjoying the open road again.
Are we nearly there yet?
From battery replacements to tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
TfL has a plan to help London reopen carefully, safely and sustainably. We're temporarily changing when 60-plus London Oyster photo cards, older persons' freedom passes and English National Concession Scheme passes can be used. From the 15th of June, you will only be able to use these passes from 9 a.m. on weekday mornings. This is to protect those who must travel in the morning peak and allows you to travel at times when you can safely social distance from others. For more information, search TfL Restart Plan. To the Mayor of London and TfL, every journey matters.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1, and our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney.
How do you kind of view the volatility in the marketplace here?
The harshest downturn for American workers in history.
Companies across the board, across industries, really trying to shore up their balance sheets.
There's very, very disturbing dynamics at work.
Breaking market news and insight from Bloomberg experts.
There's only so much that you can speed up vaccine development. Because of all the dislocations, there's always relative value trades that you could be doing.
This could be a U-shaped recession rather than a V-shaped recession.
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Bonnie Quinn and Paul Sweeney on Bloomberg Radio.
Coming up, we're going to chat with Sam Fazeli. He's the senior healthcare analyst for Bloomberg Intelligence. We're going to get the latest on the COVID vaccines, as well as Eli Lilly's successful breast cancer drug trial. Plus, we're also going to take a look at the meat processing business here in the U.S. and how that industry is dealing with the pandemic. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Paul, it's like going from watching pro tennis to pro badminton. Stocks are swinging between small gains and losses as investors weigh a rise in coronavirus infections against signs the economy is recovering. All three indices open modestly higher before starting to fluctuate. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is now little changed, up 1. The Dow's little changed, down 6. And the Nasdaq's up 0.5%, up 50. The 10-year is up 4/32. The yield is 0.73%. West Texas Intermediate crude's down 0.25% at 38.29 a barrel, while COMEX gold is down 0.1% at 17.35 even per ounce. The dollar yen 107.25. The euro $1.1223. The British pound $1.2539. Mike Wilson, U.S. equity strategist at Morgan Stanley, says the most recent economic data support the narrative of a V-shaped recovery, in his opinion.
Part of the reason why economic surprises are bouncing so much is because expectations, collapsed. And that's also part of our view. You're getting a V-shaped recovery because your comparisons are just so easy.
That is a Bloomberg Business Flash. I'm Greg Jarrett. Now we resume with Bloomberg Markets, Bonnie Quinn and Paul Sweeney.
Well, it is 11:02 on Wall Street, and we all know what that means. It means it's time to bring Dave Wilson back. The one Dave, he's been looking at small caps for us for this hour. How is the small cap index performing today, Dave?
Not well, Vonnie. It certainly has more direction, when you look at the Russell 2000 than the S&P 500 does. That's for sure. The Russell lower by 1.1%, while the S&P 500's a little changed. One of the Russell's steepest drops belongs to Enphase Energy, whose ticker is ENPH. The maker of solar equipment is down 14.5%. Short seller Prescience Point reiterated a critical view of the company. Core Civic, ticker CXW, was fallen almost 14%. The prison operator suspended its dividend and said revenue's lower this quarter because COVID-19 has reduced the number of prisoners. Rival Geo Group, ticker GEO, has lost 8.3%. And Theravance Biotherapeutics, ticker TBPH, has slid more than 10%. The company's largest shareholder, UK drug maker GlaxoSmithKline, is selling 3-year notes that can be exchanged for Theravance shares. Now, the Russell's sharpest gain belongs to Energus, ticker WATT, W-A-T-T. The wireless charging company has climbed 43% after agreeing to a partnership with China's Graypal battery. And Inner Workings, ticker INWK, has risen 20.5%. The corporate printing company's first quarter earnings beat analyst average estimate in a Bloomberg survey.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that as always. Well, it seems like we're talking more and more about pharmaceutical companies, biotech companies, as we talk about treatments for COVID and potentially vaccines. Of course, there's always a lot of M&A in this space, and there's always new drugs coming onto the market that can really impact the market. And when we do talk about these things, there's nobody better to chat with them about than Sam Fazeli. He's the Director of Research in Europe for Bloomberg Intelligence, but as I like to say, his day job is that he is one of the best healthcare analysts in the city of London. Sam, thanks so much for joining us here. Let's start with Lilly here. That stock had a pop recently on some breast cancer data coming out. What's the latest on Eli Lilly?
First, thank you very much for your very kind words, Paul. Eli Lilly, well, it's not very often that you see a large pharma company share price jump 15, 16. At one point, it was up like 18, 19% yesterday. So they had a success where I think most people had decided there was not going to be one. A drug they have for breast cancer succeeded early, I must say, a year early, earlier than expected in terms of the readout, in preventing or reducing the recurrence of disease in a post-operative breast cancer patients, in high-risk post-operative breast cancer patients. So that's the positive. And of course, the reason people were, I think, being negative about the possibility was because Pfizer failed in the same setting. Now, this adds significantly to the revenue potential for this drug. Some people calculate up to $4 billion potentially, and that has a major impact on margins. So the rest of the story falls into place. There are people now going up to, saying still there's another 10% or so upside on the stock on the sell side. So that's what drove that one up, a complete surprise.
Not only did Pfizer fail, but it failed having already had a head start on Eli Lilly by, at least 2 years. And there was also Novartis's Kisqali treatment. Sam, what's happening with that?
Yeah, so just quick to touch on this, there's two ways or reasons why Lilly might have worked and where Pfizer didn't. Pfizer went into a much earlier patient group, so patients with much less advanced or lower risk disease. So to a degree, Lilly loaded the dice in its favor. Not a problem. That means a smaller population of patients. And also the drug is different in that it's dosed constantly as opposed to having to take a drug holiday with the other two, including Novartis. Now, Novartis is running a similar trial to Lilly, not completely the same, but similar, and they're expecting data by 2022, which therefore might now mean that it should also read out early. So this is not without competition.
All right, Sam, let's switch gears a little bit to the topic of the day, COVID-19. The folks in the Trump administration certainly they continue to talk about a vaccine availability this calendar year. And as I've, talked to you and read your research and other healthcare research, it's just been years and years and years to get a drug kind of to market here. What is your sense for, the likelihood of the timing of some type of a vaccine into the market here?
Yes, so I love the phrase you just used at the end, the timing of some type of vaccine. I think the timing of some type of vaccine is very possible to be by the end of this year. The question is, will we have a vaccine that's been through the best and most rigorous safety and long-term testing? No, it's impossible. Will we have a vaccine that's available for treating people in a world which, God forbid, has a real hardcore second wave in the winter, and take some risk in terms of accept some potential longer-term safety issues? That is something that government and regulators have to accept if they want to inject people with these vaccines that are just being developed. So will there be one that looks like it's working? Yes.
Yeah, and as you say, we'll likely need several. Sam, during this whole time, I've been wondering why it hasn't been easier to change supply chains, ramp up production on what's needed, send it to the parts of the world that need it. And it seems like all these months later, there is still a shortage of things like N95 masks in places where they're needed, despite all sorts of companies, including 3M, saying that they will, swap some of their machines out and retool some other machines. Why is this happening in this day and age?
Well, I think we potentially underestimate the effort that's required to get these things actually moving. We're dealing with companies that are equivalent of juggernauts and oil tankers. To try and move them quickly is very difficult. Let's give you the opposite argument. Biotech company Moderna wasn't really spending an enormous amount of time just on vaccines. They were working quite a lot on cancer therapies with their technology. But they can turn on a dime and just say, right, we're a small company, we can do what we want. Next thing we're going to do is work on COVID vaccines. Whereas when you've got a massive company that needs to retool, etc., it takes time. And let's not forget, it's only been 5 months. So I don't want to beat them up for this. I think it just takes a lot of time. Raw materials have got to be in the right place. It just takes a lot of time.
Yeah, no, certainly don't mean to beat them up. I just find the whole thing so curious that if there's a market for it, that it won't come. I mean, Moderna, for example, it may not make anything from making the pivot to COVID treatments and COVID research. But anyway, Sam, it's a conversation we will continue. So thanks for joining us today. Sam Fazeli, Bloomberg Intelligence London. He's their pharmaceutical expert over there, and a great one he is too. Now it is time to head to our 99.1 studios in Washington, D.C. to Nathan Hager for some world and national headlines.
All right, Bonnie, thank you. Senate Republicans are fast-tracking a police reform bill following weeks of racial unrest. Majority Leader Mitch McConnell says he wants Republican Tim Scott's Justice Act on the Senate floor next week.
The witnessing of the murder of George Floyd and the experience in my hometown of Breonna Taylor certainly brings to the forefront this issue for all Americans.
Scott's bill would withhold funds from police departments that don't ban chokeholds, but a House Democratic bill would ban them altogether. Senate Minority Leader Chuck Schumer says the Republican bill doesn't rise to the moment. Texas has reported an 11% jump in coronavirus hospitalization since yesterday. That's the most in nearly 2 weeks. Florida has had a 3.3% increase in new COVID-19 cases. The state's positivity rate is at its highest level since at least April. Florida Governor Ron DeSantis says he has no plans to reverse his state's reopening. Between protests and the pandemic, President Trump's popularity is sinking. Bloomberg's Martin DeCaro reports.
The latest Reuters Ipsos poll says Democratic presidential candidate Joe Biden has opened a 13-point lead over President Trump, the widest margin this year with about 5 months till Election Day. 48% of registered voters say they'd back Biden, 35% say they'd support Trump, and 57% of Americans disapprove of the president's performance. Just 38% approve, his lowest rating since November. And his once impenetrable base appears to be eroding. Republicans' net approval of Trump is down 13 points from March to June. In Washington, Martin DeCaro, Bloomberg Radio.
Thank you, Martin. Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Coronavirus proved that every aspect of our lives, from business to health, is connected to Asia.
Healthcare firms testing the appetite for IPOs in Hong Kong too.
But you already knew that.
COVID-19 certainly had an impact on this.
Bloomberg Daybreak Asia, tonight at 6 Eastern.
What does that mean for Asia if the dollar remains on the back foot for the foreseeable future?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Economics.
All this doom and gloom was out there.
Finance.
Do you see this as a technical correction?
Investment.
What are you looking at to give you some sort of compass through this period?
The Bloomberg Surveillance Podcast.
Lots and lots of talk about what the Fed should and shouldn't do.
Tom Keene, Jonathan Farrell, Lisa Abramowitz, and the names that shape the world's markets.
We speak with Professor Schiller of Yale University.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Are you interested in a challenging and exciting...
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again. And surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
The Mini Electric was raring to go until ready, set, stop. We hit the power down switch. We waited. But now it's time to start up again. We're ready with the Mini Electric and whole Mini range online. Showroom safety measures are set, and we're feeling good to go. Find your perfect Mini at mini.co.uk.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
When you're buying tech online and you want to make sure you get exactly what you need, would you rather talk to an algorithm? Or to someone called Al? Or Derek? Or Sanjay? Or Sue? Or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan.
Thank you.
And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbags to kids.
Desks for home offices.
Delivering the goods.
shipping footballs,
fruit trees,
and dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1. And our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks whipsawed investors in volatile trading amid worrying increases in coronavirus cases here and abroad. Treasury yields are edging lower and the dollar fluctuates. We take a look at those numbers every 15 minutes. The S&P is little changed. Dow Jones Industrial Average is down 0.2%, down 50, and the NASDAQ is up 0.4%, up 41. The 10-year is up 2/30 seconds. The yield, 0.74%. West Texas Intermediate crude's down 0.4% at 38.21 a barrel, while COMEX gold is down 0.3% at 17.3120 an ounce. The dollar yen is at 107.23. The euro, $1.1221. The British pound, $1.2534, and the Canadian loonie is at 0.7377. CNBC is reporting that Hertz was told by the SEC that it has issues with its plan to sell stock. Hertz tells potential investors the stock is likely to flop. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Bonnie Quinn on Bloomberg Radio.
A tough few months for the meat industry, that's for sure, in the United States. More than 20 U.S. meat processing plants temporarily closed between April and May, obviously due to the coronavirus. And then there's also now the threat to the industry of probes into beef and poultry pricing. Yet our next guest is actually very positive on the industry. Let's bring him in now. Arun Sundaram. He is equity research analyst at CFRA Research. Arun, first to the coronavirus and the closures. How long will those closures continue? And, you know, obviously safety first, both for the employees of those meat processing plants and also for those who are going to be receiving the meat.
Yep. Thanks for having me. So, yeah, like you mentioned, between April and May, more than 20 U.S. meat processing plants temporarily closed due to COVID-19 outbreaks. And then this resulted in a 40 to 50% drop in U.S. pork production capacity and a 25 to 35% drop in U.S. beef production capacity. This is obviously very troublesome because meat processors are dead center in the entire meat supply chain. So there was obviously a large bottleneck among these players. But the good news is that just about every meat plant has now reopened. We estimate capacity is back to around 95% of levels compared to last year. So that's the good news, but the bad news is that, as you mentioned, coronavirus outbreaks are still popping up at plants across the United States, and many of the frontline employees still don't feel safe. In fact, one of the largest meat packing unions announced this opposition to the reopening of all these meat processing plants, and they essentially stated that American workers are putting their lives on the line every single day to keep the supply chain running smoothly.
So, Arun, what's happened to prices over the last couple of months here? Is that there's been this shock to the supply chain for meat and poultry?
Yeah. So there's been an ample supply of livestock relative to processing capacity. And so what this has done for meat processors is it's driven margins much higher. In fact, we estimate margins, we're at record points at one point during April and May. So for processing margins to be record high, you have to have high wholesale prices and low raw material costs, right? So pork prices in May jumped, pork wholesale prices jumped as much as 40% in May, and then beef wholesale prices jumped over 100% in May. And then at the same time, the raw material costs were down nearly 20%. So higher wholesale prices and lower raw material costs has resulted in sky high margins, which has benefited meat processors because they were facing incremental costs associated with COVID-19, including idle plants, less fixed cost absorption, bonuses paid to frontline employees, and then costs incurred to ensure safety of the workers and costs incurred to clean plants thoroughly.
Yeah, and then of course there is the threat of the fake meat or the plant-based meat world, right? And that had really sort of started to become popular, and I guess still is, maybe even more so now than ever. How do you see that impacting demand for meat?
Yeah, so there's been an interesting dynamic playing out because plant-based meat, so the company that we cover, Beyond Meat, one of the largest pure players in the plant-based meat space, their shares have risen by more than 100% since mid-April, which is when these animal protein plants started shutting down. And then these animal protein stocks, they're only up about 10 to 20% since mid-April. So we believe plant-based meat companies like Beyond Meat have been excessively rewarded due to this dynamic playing out. So we actually lowered our opinion on Beyond Meat to a sell from a hold on the 13th. And I think one thing that people are maybe overlooking in Beyond Meat is that over 50% of their sales are to customers in the restaurant and food service industry. That's well above the exposure of most conventional meat processors. And, as everyone knows, the restaurant and food service industry has been, facing a tremendous amount of challenges because of the COVID-19 pandemic.
So, Aaron, longer term for the meat poultry business, what's the bull case long term? Are people actually eating more beef and poultry?
Yeah. So we have a positive fundamental outlook for animal meat processors, for the foreseeable future, actually. Not just in the United States, but globally, global meat demand is expected to nearly double over the next 30 years. And these are projections by the Food and Agricultural Organization. So by 2050, the demand for meat is going to nearly double. And this is why we're pretty bullish on.
And what is that driven by? That's more than population growth. So that's, I guess, greater adoption of meat.
Yeah. So as the middle class grows throughout the world, people tend to adopt, a so-called Western diet, which includes more meat consumption. So that's the main driver for meat demand throughout the world.
Interesting. Arun Sundaram, thank you so much for joining us. He is equity research analyst covering the consumer staple space for CFRA Research based in Washington, D.C. Interesting that, Vani, that the industry calls for rising meat consumption going forward. I would have thought with, the plant-based foods, as you were talking about, that it might be the other way.
I'm fascinated as well. I mean, particularly since we try and adopt other diets ourselves to try and be healthier, you would think that they would be trying to avoid our diets at all costs, but apparently not. Apparently, people like their steaks.
Yeah, it's interesting that the Aaron mentioned that the production in the meat production, poultry production in the U.S. is getting back to normal despite some of the plant shutdowns that we saw recently, and then that the fact that there still is COVID-19 risk for the workers there. We'll have more on that coming forward. This is Bloomberg.
This is a Bloomberg Money Minute. The Justice Department is going to send to Congress a bill that would roll back legal protections for Google, Facebook, and other online platforms if they scrub content or fail to police misconduct on their websites. That's stemming from the blow-up between President Trump and Twitter, which fact-checked and then flagged some of his tweets a few weeks ago. The Justice Department plan has not yet been made public, but it could be sent to Congress this week. There's a push today from civil rights groups, including the NAACP and the Anti-Defamation League, to get advertisers to stop spending at Facebook. Dow Jones reports the group say they've talked with Facebook for years, but have seen little change in the way the company enforces policies around hate speech and misinformation. Facebook says it is trying to remove more of that kind of speech and is aiming to register 4 million new voters this year. On Wall Street, the averages are still looking for direction, crossing back and forth over the flat line. The Dow down 31, the Nasdaq up 41, the S&P falling a point. I'm Joan Doniger, Bloomberg Radio.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative, and that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
This July 4th, tune in to the Boston Pops right from your home. For greatest hits, finest moments, guest artists, and a special performance of a stirring salute to America's heroes. From first responders to essential workers, we honor those giving their all in this time of need. A Boston Pops salute to our heroes, presented by Bloomberg and Eaton Vance. Watch and listen from home July 4th, starting at 8 p.m. Eastern, exclusively on Bloomberg Television and Bloomberg Radio. COVID-19. Can the world reopen?
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Listen, that's a dream. Everyone has them, jingling away in the back of our minds. And most of the time, that's where dreams stay. So easy to ignore. Anything can drown them out, and everything does. But at Honda, we listen to our dreams. We get right up close. And on really good days, they become reality. From 2022, Honda's mainstream cars will only be hybrid or electric. Honda, the power of dreams.
This is a message from the government. Some businesses are now able to welcome back their employees and customers. To keep everyone safe, it's important you follow government guidance and make your workplace COVID secure. Businesses should carry out COVID-19 risk assessments, put in place hygiene procedures, and help staff and customers keep a safe distance. Talk to your employees, listen to their concerns, and if possible, help them to work from home. Every workplace is different, but by following this guidance, you can get back to business safely and play your part in managing the risk of infection. Visit gov.uk/working safely for more information. Stay alert, control the virus, save lives.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to an algorithm? Or to someone called Al, or Derek, or Sanjay, or Sue, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
The IBM Flash storage solution can be broken down into 3 S's. Speed. Retrieve data fast. Scalability. Grow your storage as your business grows. Simplicity. Easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
Picture this. Small businesses on eBay are working to
Get things moving.
Sending spices to novice cooks.
Airbags to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1. And our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
We've got a lot of catching up to do.
Hi there, everybody. Lovely to be with you again.
Over 100 live games in just 6 weeks on Sky Sports. With 64 Premier League and 45 EFL Championship games, everything is still to play for. Scores to sell, relegation to avoid, Europe up for grabs, and the titles to win. Upgrade to Sky Sports today. Requires Sky Sports Premier League and football packs. See sky.com/sports for details.
Live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
We're going to be on Capitol Hill for the next half hour before we actually go to Capitol Hill for the Fed Chair's second day of testimony. First, we're going to be speaking with Congressional Tax Reporter Laura Davison on the PPP programs. Also, Steve Matthews, Bloomberg Fed reporter, will speak to us. Now, let's get to Greg Jarrett for Bloomberg Business Flash.
Bonnie, the S&P's been fluctuating, little change now after 3 days of gains. The energy, utilities, and financial sectors are falling as infections of coronavirus increase from China to Brazil, Texas, you name it. They're warning they may need a new lockdown in Iran. Treasuries have gained and the dollar is fluctuating. We take a look at these numbers every 15 minutes throughout the trading day. The S&P 500 is currently down 0.1%, down 5. The Dow is down 0.4%, down 106. And the NASDAQ is up 0.4%, up 37. The 10 years down, is up 230 seconds with a yield of 0.74%. West Texas Intermediate crude is down 1.4% at $37.85 a barrel, with COMEX gold down 0.25% at $17.3240 an ounce. The dollar yen 107.26, the euro $1.1217, and the British pound the dollar $25.90. I haven't quoted silver lately. Silver's up 0.3% at $17.51 per ounce. Carver Bancorp and Urban One, two companies tethered to serving black and underrepresented communities, more than doubled today. As traders aid trends associated with buying black amid global protest against police brutality, Carver jumped as much as 853%, the most on record. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Paul Sweeney and Bonnie Quinn on Bloomberg Radio.
Well, the U.S. has spent more than half of $3 trillion in economic rescue funds passed by Congress, however, with little of the oversight intended to ensure that the money goes to the right places. To get more color on this, we welcome Laura Davison. She wrote a fantastic story on this. She's a congressional tax reporter for Bloomberg News, joining us on the phone from Washington, D.C. So, Laura, how can $1.5 billion be spent with little to no oversight?
Well, part of this was the way that Congress designed it, is they wanted to get a bunch of money into the economy really quickly, you know, those stimulus checks that went out, those PPP loans, all of these things, because people and businesses needed money right away as the economy basically ground to a halt in March. The problem, though, as we're finding out, is that when you move quickly, you sometimes break things, and there are problems, and there's no one there watching how the money's being spent, who it's going to. So it opens up a lot of doors for potential for fraud, or as well as just, you know, things that aren't spent in the best way.
So, Laura, who was supposed to be watching this? It's not just Secretary Mnuchin. There were supposed to be some bodies watching this, right?
Yes, yeah. There's actually a bunch of different groups. So there's a group in Congress that's overseeing this. They are really just getting started. It's a bipartisan group. Both Pelosi and McConnell get to appoint people, but there's been a lot of disagreement over who should be chairman. It has to be a bipartisan pick. They've been back and forth on this for several months, and they haven't been able to agree on someone. So that group, is, while it exists, has not really been able to do much yet. There's also a new special inspector general that will be overseeing a lot of this money. That pick was just approved earlier this month. He really doesn't even have an office space yet. So this is you're really talking about people that don't have letterhead paper. They don't have, a phone system set up. There's really not infrastructure for them to even, send emails, much less conduct a lot of big oversight work.
Yeah, the SBA reporting that loans have been approved for 4.6 million small businesses already, Laura, $513 billion worth. So there's still about $130 billion in funding remaining. Will it be all, applied for, if you like? Because what do you get, like 2 months, and you have to keep everybody on your staff, and a lot of small businesses are not even applying for it because in 2 months' time it may not be worth it for them to have 75% of their staff on their payroll still.
Yes, yeah. So there's, as you mentioned, there's about $130 billion left in that pot of funds, and applications for that money close at the end of the month. And it's very likely that there will be tens of billions, if not more than $100 billion left of that money. So the question is sort of what happens with it? Does Congress reappropriate that for other purposes? Maybe businesses who have already gotten some money could come back for a second loan. These are all, kind of things that Congress is still having to think about right now. But it's very likely that there will be some money left, because a lot of businesses have decided that it's either to apply for this money, or there's also some political risk, because we saw with larger companies who qualified for the money, but Shake Shack and Potbellies who were then shamed by politicians saying, hey, this should be for the little guys.
So, Laura, is there, Tim O'Brien was on with us earlier today. He has a column out suggesting that a lot of this money is not getting to the small business owner, maybe the small business owner of color, some of the folks who really need it the most. Is there concern within Washington that this program is not being, the money is not being spent correctly or wisely?
There's a lot of concern, particularly from Democrats on the minority issue of is this money going to rural communities, to minority communities, to underserved communities. There's been several hearings on Capitol Hill, and there's a big push on Secretary Mnuchin to release sort of the granular level data on the program. Which businesses have received this money and how much they've gotten. Mnuchin said last week that he was not planning to release that, and since then you've seen a big outcry from members of both parties saying, hey, this is taxpayer money. We should be able to see where it's going.
I mean, the problem with opening an investigation now is that, as you say, more than $500 billion of this has already been dispersed. So if there has been fraud, what happens to that money? And will it be too late for the small businesses that ended up having to close because they weren't able to get access to some of that money in the early days?
That's a really good question. There's a lot of unknowns there, in terms of recouping some of the money. If there is, cases of outright fraud, the government could go and pursue legal action against that. But if it's just sort of the money maybe wasn't allocated in the best way possible, and some businesses fell through the cracks, that's really more of a question for Congress of do they want to have a second loan program for some of these businesses that didn't get help the first round. That's certainly possible, though that would be very politically difficult right now, as there's lots of debate in Washington about if there should be another stimulus bill, and if so, how much should that encompass?
Yeah, it's a great story, Laura. I mean, we've heard, some hedge funds have applied for this and so on, but you point to the reality television personality who tapped a $2 million loan from the PPP and actually went and bought some diamond jewelry and a Rolex watch, because who can't... Who can't have a Rolex watch and diamond jewellery together at the same time? Laura, thank you for joining us today. That is Laura Davison, congressional tax reporter for Bloomberg. Boy, is she going to be busy.
Yeah.
Between now and November, and then beyond November, no doubt as well, Paul.
Yeah, because I think there's, the next thing coming down, Bonnie, is another piece of fiscal stimulus coming from Congress. So, and that'll be much more political than I think this most recent package of $3 trillion.
Exactly. And, you just have to wonder if it's going to be as big a package and when it will come, and if it will start to get into election season at that point and how that will impact things. All right, let's now head to our 99.1 studios in Washington DC to Nathan Hager for some world and national headlines.
Thanks, Bonnie. Signs continue to emerge by the day that the coronavirus is not letting up in some of the states that were first to reopen. Texas today reported an 11% surge in hospitalizations. Florida has had a 3.3% jump in new cases, and its positivity rate is at a 2-month high. Johns Hopkins Bloomberg School immunologist Andy Pecos says it may be a sign contact tracing isn't working effectively in those states.
We would be hoping that at this point in time we'd have enough resources in place to identify those cases that are coming up, isolate them, and take other appropriate measures to minimize virus spread. That doesn't appear to be happening in several states.
And Texas might be having trouble just keeping up with its numbers. Just yesterday, Governor Greg Abbott reported a record 2,622 new COVID-19 cases. Hours later, he had to tack on another 1,400 or so after 2 prisons dumped data. Senate Majority Leader Mitch McConnell says he wants to bring his party's police reform bill up for debate next week. That follows weeks of protest over racism in policing. The Justice Act is spearheaded by Republican Senator Tim Scott.
Have a real conversation with America about the importance of police reform, accountability, and transparency, and that's exactly what the Justice Act focuses on.
Scott says the bill would require annual reporting of excessive use of force to the FBI. Democrats want a ban on police chokeholds. Former special counsel Robert Mueller is facing a federal defamation lawsuit from one of the people he mentioned in his report. Georgian-American businessman Georgi Ritskiladze is seeking $100 million in damages and a retraction. He's claiming massive financial and emotional harm from suggestions he helped cover up compromising tapes of President Trump. Global news on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
In-depth analysis.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most.
Hi, Mum.
From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda. The power of dreams. Connectivity subscription available in selected grades.
If you want to find out what the best laptop is for streaming all your favourite box sets back to back while sitting in your garden, you could ask an algorithm, or someone called Al, or Sue, or Sanjay, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hi, you're talking to Ali on Shop Live.
Isn't it nice to get advice from another human being? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
TfL has a plan to help London reopen. You can do your bit by working from home if you can. Avoid public transport and walk or cycle to work or school wherever possible. We're increasing the number of buses, trains and tubes we run, but they may still be busy during peak hours. If you must use public transport, avoid early mornings between 5:45 and 8:15 and evenings between 4 and 5:30. This will help those who must travel at this time to do so safely. Search TfL Restart Plan. To the Mayor of London and TfL, every journey matters.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbags to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Get your cook on with Asda. With Uncle Ben's rice, 250 grams for just £1. And our Butcher's Selection chicken breast fillets, only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
The wait is over. Tonight, it's Aston Villa v Sheffield United and Man City v Arsenal in a fantastic restart for the season. And with Now TV, you can watch both games live for just $9.99. Hold on, they're checking with VAR.
That's confirmed, it's $9.99.
Game changer. So, grab a Now TV Sky Sports Day Pass. Search Now TV Sports. 18 plus, content streamed via internet. Full terms apply.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
4 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Tech shares are one of the few bright spots in U.S. equity markets as worrying increases in coronavirus cases whipsaw investors. Treasury yields edge lower and the dollar's fluctuating. The NASDAQ gained for a fourth day, led by increases in Apple and Microsoft. Why don't we take a look at those numbers like we do every 15 minutes? The S&P is little change now, up 2. The Dow is little change, down 14. And the NASDAQ, as we mentioned, is up 0.5%, up 51. The 10-year is up 3/32, the yield 0.74%. West Texas Intermediate crude slides down 1.1% at $37.94 a barrel, while COMEX gold's down 0.2% at $17.3270 an ounce. The dollar yen currently 107.24. The euro's $1.1214. The British pound $1.2523. Want to get out of town? You're not alone. Pandemic-weary New Yorkers eager to escape the confines of city living may push up suburban New Jersey home prices by the most in 16 years at least. That's the forecast by real estate consultancy Otto Valuation Group for the 4 suburban counties closest to New York City, Bergen, Essex, Union, and Middlesex. The firm sees a dip in single-family home prices this year, but it'll be followed, they say, by a 6% jump in 2021, the biggest annual increase since 2005. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Vonnie Quinn and Paul Sweeney on Bloomberg Radio.
Bloomberg Markets is brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting witham.com. Before we move on, I just want to point out that Hertz has been halted for trading, news pending, so we're keeping an eye on that stock. Right, let's get to our next guest, a very special guest all the way from Peachtree Street in Atlanta, Georgia. It is our Fed reporter, Steve Matthews. And Steve, always love chatting with you, but particularly on days where the Fed chairman is on Capitol Hill. Now, today, we should point out that it's the Humphrey Hawkins testimony, as we know, yesterday and today. What I didn't fully realise, though, that this legislation back in 1978, when it was created and championed by Augustus Hawkins and others, was conceived as an equalizer. So it was supposed to carry forward the legacy of the civil rights movement. And yet, all of these years later, you have Fed Chair Powell on Capitol Hill yesterday saying racial disparities are not a healthy feature of the economy. And he's not quite sure what the Fed can do about it. Can the Fed do anything about it, Steve?
Yeah, hi, Vonnie. That's a really interesting point, because when the Humphrey Hawkins Act was passed, most people think about it now that there are Humphrey Hawkins hearings twice a year before Congress in which the Fed chairman talks about the economy. But basically, that's the only impact of Humphrey Hawkins. But it was intended to kind of create a full employment economy. And the Fed has not been close to full employment during most of the last, however many decades we've had since the 70s. In terms of reaching that full employment goal. I mean, I guess in the late 90s, we had a strong economy, and until very recently, when we had the virus outbreak, we had 3.5% unemployment. But the periods in which we've had a really strong economy have been few. And as you mentioned, and this has been something that the Democrats on the committee asked about yesterday quite a bit, and Powell talked about, Chairman Powell, is that there is inequality, and blacks and minorities have not been doing well, both in terms of income and wealth. And that is a particular problem, and one in which the Fed has some tools, but not really the full tools to address.
Well, Steve, it's interesting. Chairman Powell, I guess yesterday, said or repeated that the Fed's not looking to raise rates even through 2022. Is it unusual for a Fed chairman to kind of be that specific and over that time frame?
Yeah, it really is. And in fact, what he said and what he repeated yesterday was the Fed's not thinking about raising rates.
Right.
And the summary of economic forecasts released last week showed that through 2022, the Fed is basically going to be at zero interest rates, and Powell repeated that yesterday, that is the plan. And I think the thinking is that, the economy, even though it's recovering now, you're going to have fairly high levels of unemployment for the next several years. And as long as you have high unemployment and you have inflation, which has also been, undershooting the Fed's goal of 2% inflation, really for 8 years now, but particularly since the crisis, that, they are not really meeting either of their objectives in terms of inflation or full employment. So there's no reason to raise rates, and they're going to be, pedal to the metal for some time.
I think it's no secret that the Fed has really only been concentrating on the inflation part of the mandate for some time. Given the direction that employment was going in, it sort of felt like it had that under control. Is there an argument now, though, Steve, for perhaps changing at least the enthusiasm with which the Fed pursues that part of the mandate?
Yeah, it's interesting. You had a really interesting speech by Rich Clarida, the vice chairman of the Fed, yesterday on inflation, in which he said inflation expectations are a big problem. And, inflation expectations of the public were on the low side before the crisis began, and he warned that there's a risk that they could go lower. And if so, you could have, inflation for a very long period undershooting the Fed's goal. And this is one of the things that the Fed was considering in reviewing the framework for monetary policy. Do you want to have a higher inflation target? Maybe you need to be shooting a little bit higher if you're going to generate the kind of growth that you need to over a longer period of time and not slide into these periods where you have long periods of zero rates and long periods of inflation undershooting the objective.
Hey, Steve, let's switch gears a little bit. You're based in Atlanta here. Give us a sense of how the Atlanta market is in terms of the virus and reopening. We're just starting to reopen here in the New York metro area. What's it been like down in Atlanta?
Yeah, it's really interesting because Georgia Governor Kemp got widely criticized by public health officials, including a lot of political officials, including President Trump, for opening up too early. And Trump said he disagreed with the decision because, it goes back maybe a month now when they opened up bowling alleys and nail salons and hair salons and massage parlors, tattoo parlors, among other things. And there was kind of a sense that, oh no, Georgia's going to go, really be in big trouble. And by and large, Georgia has done reasonably well. I mean, if you look at where the hot spots are now, there has been a little bit of a pickup in coronavirus cases, but hospitalizations are way down from the peak. And there is a general sense in Atlanta, which the Atlanta metro area is a huge part of the Georgia population, that people are still wearing masks. People are not going out to dinner. If you look at the open table figures, they're down 71% year over year in terms of the number of people going to restaurants. Right. So people are very conservative still and anxious about the virus.
Interesting. We'll have to see how it plays out across the country. Steve Matthews, thanks so much for that. Economics reporter for Bloomberg News, joining us on the phone from Atlanta, trying to get a sense here of what more we can expect from Fed Chairman Powell later today. Vonnie, I think it's keeping those rates lower for longer, and that seems to be the strategy.
What will be interesting is to hear what questions will be asked. The House Financial Services Committee will definitely ask some different ones than the Senate, obviously, yesterday.
Absolutely. We have a mixed market here on this trading day. For Vonnie Quinn, I'm Paul Sweeney. This is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. Interconnect here.
Let's start with This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
You know that feeling when you get more than you expected?
Like when your week off is forecast warm and sunny. Or when there's an extra unclaimed sausage left on the barbecue. Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that feeling. Nice, isn't it? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
At Halfords, we're here to get you where you want to be. We can replace your battery at over 700 stores and garages, or even at your home or work with our mobile experts, so you can enjoy an engine that starts first time, every time, and start enjoying the open road again.
Are we nearly there yet?
From battery replacements to tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
At Honda, we've never looked to other car companies for inspiration. No, it's not a matter of an inflated ego. We just prefer listening to what people really need. For example, the new Honda Jazz Hybrid doesn't have the expected 6 airbags. It has 10, including one that prevents the driver and passenger from colliding with each other. And because we also listen to our conscience, all our safety features come as standard. No charge. Honda, the power of dreams.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you. Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From New York to our TV and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. A few moments from now, we're going to go to Capitol Hill, where we have Federal Reserve Chair Jay Powell giving his second day of 2 days of testimony, this time in front of the House Financial Services Committee. And we'll go to that as soon as the question and answer period begins. But in the meantime, we want to talk some about China. China is much in the news today, where there is a spike up in COVID-19 cases in Beijing. In addition, we have U.S. Trade Representative Robert Lighthizer testifying also on the Hill today, and he's saying that U.S.-Chinese relations have gotten a lot more complicated because of things China has done. And so we want to go now to the former U.S. ambassador to Beijing. He is Max Baucus. Before being ambassador to Beijing, Ambassador Baucus served for 36 years as senator from his home state of Montana. So, Mr. Ambassador, welcome back. I want to start with where Robert Lighthizer was today. He said things are much more complicated because of the Chinese. At the same time, he said the deal they had done, that phase one deal on trade before the pandemic hit, was a good, strong agreement, and he expects it to be implemented. Is he right? Is it a good agreement, and do you expect it to be implemented?
I'm not sure it's going to be implemented. The world's changed a lot. The U.S.-China relations have changed quite a bit in the last several months. It's already frayed, given the large tariffs that we imposed on China, and the rhetoric, the campaign rhetoric, which is very, very strong against China, blaming China for lots of different problems, and some of it very valid, like its actions in Hong Kong. But then add to that, COVID came along, COVID-19, which has made it very difficult for China to implement its part of the trade agreement. It promised to buy about $200 billion worth of products, agriculture, manufactured products, and financial services, and it also opened up its market for financial services. But COVID is really thrown the Chinese economy, as well as our economy, for a loop. And consequently, China will not be able to live up to the end of the deal. I think China would like to. China wants to keep relations with the U.S. On a solid footing. I think that's partly why they've invited the Secretary of State Pompeo to meet with their top foreign policy person today in Hawaii. But I think it's not going to go into effect phase one. I don't think it will.
all of which does support Robert Lighthizer saying it's complicated. Whatever happens, it's a complicated relationship. But it's interesting when they asked Ambassador Lighthizer about the Chinese situation, they asked specifically about Hong Kong. And he said, I'd really like to keep that separate from trade. I don't deal with Hong Kong. That's more in the political foreign relations area. I really want to focus just on trade. Is that a line that he can defend? Can he separate out the trade relations from what's going on in Hong Kong?
Well, I think he answered that correctly. We should. It's a problem when so many different issues are all linked together. That makes it very difficult to get any one of them solved. I think Hong Kong should be delinked. We should deal with Hong Kong separately. And the fact of the matter is, there's not a lot the United States can do about Chinese passing this national security law, which will take effect soon in Hong Kong. China may not really implement all the provisions of it, but still it's hanging over the head of people in Hong Kong. That should be separated out. We should just focus. Lighthizer's right. We should focus just on trade the best we can. However, all the U.S. Criticism of China over Hong Kong publicly makes it a bit difficult for China to want to deal with the United States. It's just not good to criticize China so publicly.
One of the things that Ambassador Lighthizer said was things have gotten more complicated with respect to national security issues and particularly technology issues. That was always going to be a tough phase 2 if we got to that, as a practical matter. What are the incentives for China right now to come to the table and really make concessions to the United States?
Well, China wants to work with the United States as much as it can. We are joined at the hip economically, China and the United States. They sell a lot of stuff to America. We buy a lot of their goods. And the fact of the matter is, China very much is trying to encourage U.S. investment, more U.S. investment in China. They want investment in China, so it'll boost up their economy. So there are a lot of incentives for China and the U.S. to work well together. National security is a big thorn in our side, clearly. Cyber security has been very difficult for both countries to handle. That's going to be an issue that whoever's elected president this November is going to have to work with solidly. I mean, we just can't blame each other. We just have to sit down and figure out not just trade, but also set standards for national security that we can agree to. I'm talking about cyber standards like Huawei and ZTE and other companies that sell technology products. We have to somehow, both countries, and along with other countries in the world, set some standards so we can minimize some of the national security worries.
So, Mr. Ambassador, in the meantime, we do have these reports now that Beijing has some problems with COVID-19. They've closed the schools, they've closed some of the flights down, things like that. Give us your assessment of what's going on there, because we thought that China had been really effective in shutting down COVID-19, the spread of the pandemic, certainly in Wuhan, but now it looks like it's popped up in Beijing.
That's right. As a consequence, China has cut about 50% of all the flights going in and out of Beijing. It looks like the additional COVID in Beijing is due to another wet market. Wet markets are very popular, not just in China, but in Asia. Wet markets are really just large, open markets. They're called wet because sometimes it's ice to keep a lot of the products chilled. But I think China's done a good job. They're near draconian in their efforts to stop the virus once it does emerge. This really shows, I think, that this virus is very, very difficult to control. It's going to pop up different places, not just China, but the U.S. and other countries. And my judgment, have to be even more vigilant to try to stop it. Otherwise, it's going to keep coming back, and it's going to have a detrimental effect, not just on people, but also on our economies.
So Wuhan is a major city, and it's an industrial hub, commercial hub, as well as a transportation hub, an important city. But Beijing is where the government resides. If they have to really get draconian, as you put the word, within Beijing, what could they do to the functioning of the government of China?
Well, they'll find a way. One thing that's really impressed me about the Chinese serving the U.S. over there, they're tough. They're practical. They're pragmatic. They find solutions. And whatever it takes, they'll find a way to do it. Now, because it's an autonomous government, the government can just impose the solution. It doesn't have to ask for acquiescence or agreement. It just does it. So they'll close schools. They'll cut down transportation. They'll seal off a certain part of Beijing, as they already have. That is where this new eruptions occurred. They'll do what it takes. They're very, very efficient that way.
Mr. Ambassador, you mentioned national security, particularly in connection with cybersecurity. What about really boots on the ground, people shooting at each other? We now have reportedly 20 Indian soldiers who've been killed in a border altercation up on the Himalayan border that's disputed, as I understand it. What do you make of that? I mean, it's been some years now, as I understand it, since China and India really shot at one another.
Well, that's true, although it's been many years. When I was a student, college student, I hitchhiked around the world. I was lucky to spend about 40 minutes with Prime Minister Nehru, and that was during the Chinese border crisis then. That was, a long time ago. It's always been an issue. Kashmir is contested by both countries, but they tend to be skirmishes. It's clearly unfortunate 20 soldiers killed, but they tend to be skirmishes, and each country probes the other a little bit. I don't expect that to turn into something major. I do not.
If it doesn't turn into something major, as you say, does it reflect something about the attitude of President Xi and his regime at this point? It doesn't seem like he feels like he's on the defensive. He seems, if anything, he's asserting himself in various places.
I think that's true. I think that President Xi very much believes in the so-called China Dream. Rejuvenation of China coming back after a couple hundred years of barbarianism, as they call it, and there's bounce in their step. They feel they're on the rise, and they'll probe a little bit. They'll probe to see what advantages they can get, but it's not. I think primarily they want to make sure that the country is coherent and the economy is running well, to take care of the people, so people's incomes are up, address some air and water pollution and health issues in China. But they'll probe the Pacific a little bit, and they'll just probe around the edges, partly with their Belt and Road initiative, just see where they can gain an advantage. And it's really a very hard problem for the U.S. to address, one that our country has to do a much better job in addressing how to deal with China's expansion. We have to work with other countries. We're not doing that very well, and it's a major challenge that our country, with other countries, our allies, are going to be facing in the pursuing years.
And we happen to have an election year right now where we're going to pick the President of the United States, either President Donald Trump again, or it appears Vice President Biden. Take us through that a bit. President Trump has made China a priority from the very beginning, before he was president, no question. How would a Vice President Biden, if he became President Biden, have a different attitude toward China, a different policy? Could he be more effective, and how?
I think there's a lot of agreement in Washington today, Republicans and Democrats, and pretty much in the country, that China has to be dealt with much more solidly, much more thoughtfully, in a much more effective way than in the past. Unfortunately, I don't expect much encouragement, much constructive actions taken before the election. I think Donald Trump and Republicans have demonized China a bit too much. They're causing, I think, a lot of angst, even in China. Chinese are not dumb. They know a lot of this is just campaign rhetoric. But they're worried that it's so strong in the Trump administration and some in the Congress today against China that it may make it very difficult for any kind of a reset. I think Vice President Biden will be somewhat similar. I mean, he knows that as Vice President, and if he becomes President, he's got to help make sure that the American people deal with China properly and effectively. The big difference, I think, is going to be that Vice President Biden will be someone who won't change his mind so much. And there's someone who will work more with our allies, someone who will probably work better with Congress in developing a comprehensive strategic plan toward China, one that's more long-term, one that I think again, peoples around the world will trust, because I think Biden won't change his mind as much, and more importantly, that the Chinese will trust.
Fascinating. Thank you so much, Mr. Ambassador. Always great to have you with us. That's Max Baucus. He's former U.S. Ambassador to Beijing. Coming up, we're going to be going to Capitol Hill for that testimony of the Fed chair. He is Jay Powell. That's coming up on Balance of Power on Bloomberg Television and on radio.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobilely impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Tech shares are a bright spot in U.S. equity markets today as concerning increases in coronavirus cases are whipsawing investors. Treasury yields edge lower as the dollar fluctuates. The NASDAQ gained for a fourth day led by increases in Apple and Microsoft. Apple right now is up 0.8%. S&P 500 is up 0.1% up 2. The Dow Jones Industrial Average is down 0.1%, down 21, and the NASDAQ is currently up 0.5%, up 55. The 10-year is up 3/32 with a yield of 0.74%. West Texas Intermediate crude oil is down 1.7% at $37.74 a barrel, with COMEX gold down 0.1% at $17.3420 an ounce. The dollar yen 107.27. The euro is $1.1217. That is a Bloomberg Business Flash. I'm Greg Jarrett. Now more Bloomberg Balance of Power with David Weston right here on Bloomberg Radio.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. There is growing concern that some of the biggest U.S. states are facing a new wave of coronavirus after lifting lockdown orders. Texas reported an 11% increase in hospitalizations. That's the most in almost 2 weeks. Meantime, on a rolling 7-day basis, the number of new cases in Florida hit the highest level ever. Governor Ron DeSantis says he has no plans to roll back the state's reopening. On Capitol Hill, House Speaker Nancy Pelosi is asking committee chairs to exclude members who don't wear masks during committee hearings. A senior Democratic aide tells Bloomberg that members can always choose to participate virtually. Speaker Pelosi's move follows Monday's announcement from South Carolina Congressman Tom Rice that he and his family had tested positive for COVID-19 and were recovering. Sweden is admitting its controversial approach to the coronavirus pandemic isn't working as well as officials had hoped. While countries around the world were closing schools, shops, and restaurants, Sweden decided to take a different approach. It remained mostly open, hoping to achieve a so-called herd immunity to the coronavirus, but contagion rates in Sweden are much higher than anywhere else in the Nordic region, and its virus mortality rate is among the worst in the world. OPEC is predicting that fuel demand will remain, quote, under pressure during the second half of this year. The cartel says while there will be a gradual recovery in the global economy, it won't be enough to make up for the slump during the first 6 months of 2020. It says slow resumption of flights will constrain jet fuel consumption and high unemployment will restrict gasoline use. Global news 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. We are still waiting for the testimony of the Fed chair, Jay Powell, to begin on Capitol Hill. Right now, they're going through some opening statements, some initial opening statements. We'll go there just as soon as they start asking him any questions. And to take us through what we might expect, what we should be looking for, we welcome now Bloomberg Chief Economics and Policy Correspondent. He is Michael McKee. So, Mike, we've heard from the chair a fair amount over the last 2 weeks, including yesterday in front of the Senate. So most of the territory has been covered. But give us a sense of what we should be looking for. Are there nuances that really we might pick up on, or even subjects that aren't in the core of what he's testifying about?
Well, I'm not sure there's a whole lot of nuance left because the Fed has very few tools left. Everything they do is in the service of lowering interest rates. So whatever they're doing is to keep rates lower. It's just different methods of that, which matters to people in the markets who are trying to buy and sell the same things. Doesn't matter so much to Congress. The real issue is probably going to revolve around the fiscal stimulus that Congress may or may not do next. Powell danced around that yesterday, saying it probably is going to be needed, but I don't have any advice for you on what you should do. Oh, wait a minute, you're talking about states and localities with big budget holes who might lay off people. Well, yeah, that's something to look at. We might get more of that this time. It was interesting, Patrick McHenry, who's the ranking Republican on the committee, in his opening statement, said he wasn't sure that the Fed should be part of the fiscal experiment, that the Congress should not ask the Fed to do things in the fiscal space. And a lot of the programs that the Fed has adopted, particularly this Main Street lending program, really qualify as that. So it may be a marker from Republicans, and we'll wait and see what they say during the hearing, that they don't want any more lending programs from the Fed that are in the fiscal space that are really designed to bail people out.
So, Mike, before we got in this crisis, month after month, we'd hear that the Fed is data dependent. Are they sort of minimizing one of the data points, which is price? That was a question asked yesterday of the chair. Given your actions, are you taking sort of away the importance of price anymore because you're sort of setting prices for assets yourself?
Well, there's two issues. On the asset side, yes, the Fed has basically suspended all price discovery. It just kind of depends on where the Fed is at the moment. They're artificially pushing down on rates. They're artificially compressing spreads. On the other hand, that's something that the markets are used to because basically we went through that for 7 years with the zero lower bound. Now, the other thing that they are worried about is the price level in the United States. We are seeing, because demand and supply have both contracted, a drop in prices that's brought us very close to zero. They don't want to get into deflation. They don't think that's going to happen. But last night, Vice Chair Rich Clarida gave a speech in which he said he's afraid that if we see inflation expectations become unmoored, that deflation could come along rather quickly, and the Fed has to be vigilant. The only good news is you take a look at what inflation break-evens on Wall Street are and consumer expectations in that University of Michigan survey out last week. They're rising at the moment. People think inflation is going to be higher, perhaps because of all the Fed stimulus.
Yeah, and the other question about the consumer is not just what they think will happen with inflation, but are they willing to come back out and keep spending? I mean, they have more money. We've seen that already. Savings have gone up. But the Fed is limited in what it can do about affecting the confidence of the consumer to come out and spend that money.
Which is a point that Jay Powell made yesterday and has made several times, that this really all depends on whether or not people believe they won't get sick when they go out. And some of the stories that we're seeing from some of the states that reopened early are going to weigh on the psychology of others as they're allowed to come forward. We were just reporting that New York City is going to go to phase 2 and allow a lot more activities starting on Monday, including outdoor dining. Well, do you trust that you can do that? That's going to be the key to, in part, how quickly we recover. The other aspect is how many jobs are still going to be there when we get done and when the economy reopens. That's the hard part to know, and that's why the Fed can't really be too data dependent at this point. They're almost more anecdotally dependent, just kind of watching in general what's happening with the overall economy.
Yeah, exactly. Something that Chair Powell warned about. But as a practical matter, as we look at numbers coming out of Texas today, out of Florida, it certainly raises some questions in anybody's mind about what's happening. And I found it interesting yesterday that Chair Powell said, we are looking at projections on coronavirus. We're not projecting a second wave, but we have various scenarios that we're taking a look at. I never thought we'd ask the Fed to be sort of epidemiologists.
Everybody is at this point. It is the data point that matters most. Are infections going up or down? Because this is one country. And even if you have a spike in Florida or a spike in Arizona, those people travel and it can spread. And the example they've set, all the people who are not wearing masks and congregating in big crowds, if that happens in the states, say in the Northeast, that are now opening up again, then we've got a real problem, and the Fed has to keep that in mind as they look forward to what they can do. The problem is, Fed, David, is really about out of things it can do. It's really up to Congress, and I think Jay Powell will make that point today.
Yeah, fascinating. Well, stay with us if you would, Michael McKee. Right now we want to go to Scarlett Fu, our colleague, for a report on where the markets are, how they're reacting to what's going on. They seem to be a little bit all over the place, right, Scarlett?
All over the place, and right now flat. Flat for the S&P 500, Dow off slightly, NASDAQ up by 0.5% as big tech continues to catch a bid here. What's interesting is that volume has really dropped off, David. Volume in the Dow and the S&P off by 1/3 from the 5-day average here. So after this 3-day rally we had seen in equities, stocks seem to have stalled, and the caution is reflected across asset classes. You can see oil down by 1.25%. The dollar bouncing around slightly higher at the moment. The 10-year yield moving south to 75 basis points. Higher price, lower yield. That's why it's in green. Now, when you look at group movers, energy, the big decliners here off by more than 2% as oil prices head lower. Real estate investment trusts and utilities, interest rate sensitive stocks also moving down. Tech, as I mentioned, the big gainers here, and consumer discretionary doing well. In addition, one thing I'm keeping an eye on here, David, is credit, because Jay Powell will be speaking, and of course we know the Fed has been very active in supporting the credit market, and the flows into credit have really caught my attention, because it turns out the flows into fixed income ETFs such as LQD has overwhelmed the money going into equity ETFs. And according to Chris Verone over at Strategas, we have seen $67 billion of bond ETF inflows since March 23rd, only $13 billion of equity ETF inflows. So he calls that a relatively modest flow into equities, and perhaps the excess in the markets is not necessarily in equities, but perhaps elsewhere in fixed income. And you can see there's a lot of money waiting to get off of the sidelines there. Almost $5 trillion of cash sitting in money market accounts. It's a reminder that when people are looking for places to move their money, especially in equities, the big cap tech names that we're just talking about that's leading the NASDAQ higher may not be the place you want to be, because according to Deutsche Bank, the positioning there is really stretched in those mega cap growth names, especially the tech stocks. When it comes to the rest of the market, small caps, international stocks, emerging markets, positioning is extremely low. So it's a good reminder, David, that the investable universe of equities is much bigger than the S&P 500 and the NASDAQ 100.
Fascinating. Thank you so much, Scarlett. That was really helpful. Scarlett Fu, our colleague. Let's go back to Michael McKee now as we continue to wait for the question to begin of Chair Jay Powell of the Fed. So Mike, Scarlett was saying there how friendly the Fed has been to the credit markets. They were particularly friendly a couple of days ago when they decided to start buying those bonds from corporations directly, not through ETFs. Was there anything in the marketplace that required that or indicated it was needed, or are they just on autopilot at this point?
Well, you know, what happened, David, is they said they were going to buy bonds in the secondary market and ETFs. And they started by buying ETFs. And it turns out the reason that they did that is they were trying to develop their own index of bonds that meet their criteria. They have criteria on what they can buy, 5 years maximum, and they have to be an investment grade rated company that has most of its operations in the United States, that sort of thing. Now that they have that index, they say they're going to move over to buying individual bonds, but not spend any more money. That was kind of the market-making news out of Powell's testimony yesterday. They've been spending about $1 billion or $2 billion a month on the secondary market purchases. So I would not expect this to have a major impact. Where it may have an impact is in that we saw a big compression in spreads once they announced it. And there were some on Wall Street who said, yes, if they don't follow through, then those could widen again, particularly if we get some bad economic news. So this is more a follow through on what they said they were going to do, but not really a ramping up of anything, it appears.
Yeah, there's price discovery. It's just the price is set by what people anticipate, the markets anticipate the Fed is going to do, or they're going to disappoint. Talk about the Main Street lending program that you and I have talked about quite a few times. I understand it's up and running now, but when I heard yesterday, they're not going to be dispersing any funds for a little while yet.
Well, up and running means that banks can register with the Fed, and they could start this week registering with the Fed. And once they get approval from the Fed, they can start making loans. So it's a couple of step procedure.
and we're only just at the point where maybe some banks are getting some approvals. Then they've got to take in applications from people. And this is much more complicated than the Paycheck Protection Program, because these are bigger loans for bigger companies, some of which may be private, and a lot of it based on relationship banking with the individual bankers who will determine whether people are good credit risks. Because in this case, unlike the PPP, the banks have to retain at least 5% of the loan, so they are taking credit risk, and they're going to want to make sure that the people they're lending to aren't going to default. And so we have to wait and see how long it takes the banks to process loans before they actually put them up to the Fed to borrow. One of the issues, because it's taken so long, is who's out there that still needs money that can't get it from anywhere else. And if you're in that category, are you more likely to default because nobody else would lend you money? So there's a lot of questions about how well this whole thing is going to work.
Exactly. I mean, when the PPP came into place, a lot of people questioned, will people really ask for it? Will the money be dispersed? As a practical matter, it was overwhelming as a practical matter. So thank you so very much to Michael McKee. He's our Chief Economics and Policy Correspondent. And now we are going to go to Capitol Hill and the House Financial Services Committee, because we are starting to get questions to the chairman of the Fed. He is Jay Powell.
Support the economy, quote unquote. On May 13th, 2 days before the House passed the HEROES Act, you reiterated this message, saying, quote, additional fiscal support could be costly, but worth it if it helps avoid long-term economic damage and leaves us with a stronger recovery, quote unquote. On Sunday, Dallas Fed President Robert Kaplan seemed to echo that same quote. Fiscal policy is going to be critical from here, quote unquote. And yesterday, former Fed chairs Bernanke, Yellen, and more than 130 economists wrote a letter calling for a bold congressional response, including, and I quote, continued support for the unemployed, new assistance to states and localities, and investments in programs that preserve the employer-employee relationship, quote unquote. The May jobs report showed slightly better jobs numbers than the April jobs report, which was the worst in recorded history. But there's still major reasons for alarm. Black unemployment rose to 16.8%, and 600,000 public sector jobs were lost. Yet, this administration and Senate Republicans are not moving with any urgency. Republicans seem to be more focused on a more limited response, while granting a broad liability shield for major corporations. Question, do you agree with your predecessors, Chair Powell? Should Congress take bold action as soon as possible, quote unquote?
Thank you, Madam Chair. So I would agree that Congress has already provided significant fiscal support, and that support is now having a positive effect on the economy. We see it in consumer spending and income data. We see it in payrolls. All of that is helping. And I would just note that there are something like 25 million people who are still who have been dislodged from their job, either in full or in part due to the pandemic. And I would think that it would be a concern if Congress were to pull back from the support that it's providing too quickly. I wouldn't presume to prescribe exactly what you should or should not do, but I would say that it would be wise to look at ways to continue to support both people who are out of work and also smaller businesses that may not have vast resources for a continued period of time, not forever, but for a period of time, so that we can get through this critical phase. The economy is just now beginning to recover. It's a critical phase, and I think that support would be well placed at this time.
Thank you very much. On May 15th, more than a month ago now, the House passed the HEROES Act, which would, among other things, provide $175 billion in rental and homeowner assistance, nearly $1 trillion to support state, territory, and local governments, and another round of direct stimulus payments for individuals and families. I would note many states are reporting an uptick in confirmed cases of new highs, hospitalizations, with some officials slowing their effort to reopen. So who will suffer if the Senate does not properly adopt these measures to support state and local governments, renters, homeowners, and the broader economy?
Well, as I mentioned, Madam Chair, I do think it would be appropriate to think about continuing support for people who are newly out of work and for smaller businesses who are struggling to get through what will be a temporary period as the economy moves back up toward higher levels of activity.
Thank you very much. Before moving on for the next question, I'd like to call on Ranking Member McHenry to share with us some information that is very important to this committee.
Well, Madam Chair, I'll allow you to please continue your questions. I'll take that out of my time. But well, actually, while we're here, since the technology is tough, point of personal privilege, I would seek to inform committee members about the tragic passing of our colleague and friend Andy Barr's wife, Carol, last evening. When Andy arrived home, he found that his wife had passed. They have 2 young children. She was 39 years old. This is quite a surprise and shock for all of us. But wanted to ensure that committee members know this information. Please keep Andy and his 2 young girls in your prayers. Thanks so much, and thank you, Madam Chair. Yield back.
Thank you so very much. And now, Mr. McHenry, I will recognize you for 5 minutes for questions.
Well, thank you, Madam Chair. And look, Chairman Powell, Chairwoman Waters, her questions about fiscal policy are certainly, I think, appropriate. We always want the Fed chair to endorse our pieces of legislation. That is commensurate with every previous Fed chair and certainly with you as well. However, the monetary and fiscal policy are 2 very different things. And so I would urge you and the leadership of the Fed to stick to monetary policy. Now, your words of encouragement that we have our responsibilities on the fiscal side of the house, I think, are well noted. And what you're telling us about the employment marketplace on a going forward basis, I think, is informative for our policy making. And so thank you for your statements there that additional congressional action is required. Now, along those lines, we have the Main Street lending facility that is to be stood up soon. So walk me through what the intention here is, because this is not something that is, and over the last 100 years, the Fed is engaged in. The intention here, and what is the missing piece that perhaps Congress should think about filling in?
Mr. McHenry, are you asking specifically about Main Street?
Yes. So if you say the intention of the Main Street lending facility.
Okay, great. So for smaller companies, there was the Paycheck Protection Program. And for companies that have access to the bond market and are investment grade rated, we have corporate credit facilities. And then there's the large group of very important companies, very diverse, different sectors, different needs, just very different. And those are, for them, we have the Main Street facility. And our intention is that if there are creditworthy companies, to the extent there are creditworthy companies in that space who are not able to get credit from the banking system because of the pandemic, we want to be there to provide that credit. So that's what we've been working on. It's significantly different from any other undertaking we have been working on here, particularly because that space is, by definition, it's a space where commercial banks really are the key form of liquidity and of lending. And the bank credit agreements are always negotiated, so there isn't a really high level of standardization. Each one's a little bit different. So we've got to find a way to get to those borrowers, get through their credit agreements, and get them funding. And we're working through the banking system to do that. We have now registered lenders so that the facility is effectively open now. The lenders are registering and they can now begin to make loans. We're encouraging them to do so. And those loans will soon be transferred 95% interest in them will be transferred to the facility. So we're there, we're, as I think we've shown, as we go with all these facilities, we are learning. No one's ever done this exactly, and so we've been constantly taking feedback from lenders and borrowers, and we'll keep doing that. And that's true for all of our facilities until we feel we've got the facility that can do the best job.
Okay, so that's an unconventional set of monetary policy that you're utilizing, given the unconventional nature of this health and therefore economic crisis that we're facing. We also see other banks, Japan and Europe, trying to control inflation targets using unconventional means, such as yield curve control and negative rates. Do we have empirical evidence to support deploying these tools in the United States as you see it?
There's a split. I'd say the evidence is mixed on negative rates. There are those who believe negative rates are quite effective, and there are those who see the results as somewhat ambiguous. I think here in the United States, we've looked at it carefully. We looked at it during the long expansion that ended in February and chose not to deploy them in the United States. Lately, the FOMC has looked carefully at negative rates and continues to see pretty broadly across the committee that negative rates are not something that we think is appropriate for the U.S. economy, at least at this time. And it's not something that we see ourselves resorting to. Instead, we look at ourselves using asset purchases and forward guidance. In terms of yield curve control, as you pointed out, it's currently being used by a couple of central banks around the world. And that's just, rather than buying assets, what you're doing is you're saying, we won't let the treasury curve at a certain level move above something. And if it starts to move above that level, the rate moves above it, then we'll buy treasuries to drive the rate level back down. The United States actually did that from the late 40s into the early 50s. I'll just finish, sorry. It's something we're really just educating ourselves on at this point. It's not something we have at all decided to do.
Thank you for your testimony. And Chair Powell, I also appreciate the fact that you said when the crisis passes, we will put them away, these new tools. I think that is a very sober assessment. We need to have a return to normalcy once this crisis passed. Thank you for your leadership, and I yield back. Thank you, Chairwoman Waters.
Mr. Cleaver, you recognize for 5 minutes.
Thank you, Madam Chair. And Chairman Powell, again, thank you for being here. I started out with my opening comments talking about the situation that we find ourselves in this country. And I believe that this is a moment unlike any other that I have seen in terms of the country's willingness to finally address these long-lasting issues of race and putting them aside. I spoke to a group of 5,000 demonstrators, and I was almost brought to tears when I stood up to speak because the crowd was probably 65% white, and the rest maybe brown and African-American people. So I think this is a different situation. And I believe that the Federal Reserve has a place in this particular moment. I think that you could play a role. And one of the things I'm thinking about, the Justice Department used to do and probably still should do what they consider patterns and practices, where if there's a problem in a particular city, some police department or the fire department or maybe just that city, and they go in and they do a study and enter into a consent decree to try to enable change, and that happened in Ferguson, Missouri, and Ferguson has changed dramatically. But what I'm wondering how you would feel about patterns and practices with some of our financial agencies, where there is an obvious lack of inclusion and maybe even history of problems. Do you think that would work in the financial services world?
Well, we do as you know, we do supervise banks for fair lending practices. And, where we see that kind of pattern in practice, we engage in strong enforcement measures. So there is some of that going on already.
Are there other steps though that the Federal Reserve can take to confront this moment? Do you believe that the board can take on some of the issues of economic injustice and I may be using terminology that's not universal, but increasing the minimum wage and expanding the earned income tax credits, things I mentioned earlier, and to try to begin to iron out, if you will, some of the wrinkles that have been around way too long. It's not even, I don't even feel great about even discussing this issue in 2020. So I see a role, but I'm just wondering if you think the Fed can play a role.
I do think we have a role, and I believe we will do our best to play that role. I wouldn't say it's the lead role, but I would say that we are definitely recommitting ourselves to enforcement of fair lending laws, as I mentioned. I would also say, just as an institution, we want to be. We've tried to make it a very high priority of diversity and inclusion. So we want to set an example for that, both internally, to some extent. We, my colleagues and I have spoken out publicly on these issues, which I think is appropriate in this unusual moment. And then the last thing, and probably the most important thing we can do, is try to get back as quickly as possible to the labor market we had for the last couple of years. There's nothing like a tight labor market for the lives in low and moderate income communities. We saw things we hadn't seen in 50 years, and we want to get back there. Everything we're doing with our monetary policy tools is ultimately designed to get us back to a tight labor market as quickly as we can, and then stay there. That's really the overarching goal of what we're doing.
I appreciate your comments, and my questions were not meant to be accusatory. In fact, I think that the Federal Reserve, I mentioned earlier the comments of Mr. Kaplan, but even later on this week, I will be sitting down with Esther George to discuss some of these same issues. Thank you, Mr. Chairman, and thank you, Chairman Waters.
Thank you very much, Mrs. Weaver. Sir Wagner, you are recognized for 5 minutes.
Thank you, Madam Chairwoman, and I thank you, Chairman Powell, for coming before this committee today. And I wanted to commend you, as so many of our colleagues have, and the Federal Reserve for moving so very swiftly and decisively these past few months on keeping America's economy stable during this pandemic. Just this week, the Federal Reserve announced it would begin buying up to $250 billion in individual corporate bonds through the secondary market corporate credit facility, with the ability to also, I believe, tap into $25 billion in funding from the Treasury Department that was provided by the CARES Act. I understand the need for the Federal Reserve to have this facility at the ready, but I'd like to know why you decided that it was at this time to launch the facility now. What was the reasoning for launching this week?
So actually, this was something we've been saying since we first announced the facility we would do. It did happen to be the fact that we ultimately got around to doing it on Monday. And the overall goal of all of that is to support market functioning. This is the corporate credit facility, and this is the secondary market part of it. So we want to support market functioning, because when markets are working, companies can borrow, people can borrow. Companies aren't feeling tons of financial stress, and they're less likely to take cost-cutting measures and things like that. So I would say a couple things. First, buying cash bonds is going to form the primary mode of support over time by which we support market function, over time will gradually move away from ETFs, not suddenly at all, and will move more to buying bonds. It's a better tool ultimately for supporting liquidity and market function. At the current moment, markets are functioning pretty well, so our purchases will be at the bottom end of the range that we've written down. And as those markets continue to normalize, our purchases would decline.
Chair Powell, are you planning to hold all of these bonds to maturity?
Ultimately, we are generally a hold to maturity entity. It may be that we sell some back into the secondary market down the road, but ultimately we're a buy and hold buyer.
Chairman Powell, as you know, on April 22nd, in response to a letter from Senator Crapo, the Federal Reserve Vice Chair for Supervision, Randall Quarles, requested that Congress consider modifying Section 171 of the Dodd-Frank Act, otherwise known to all of us as the Collins Amendment. Do you agree with Vice Chair Quarles that Congress should revisit the Collins Amendment to ensure that banks are able to adequately respond to increased credit demands?
Yes. So what we're looking for in a lot of these things we're doing is temporary relief during the pandemic so that the banks can use their balance sheet to support their household and business customers. It's no more complicated than that. So as they've taken in more deposits and as they've engaged in forbearance on things like credit card balances and things like that, their balance sheets grow. So they've been supporting their customers and borrowers, and this is simply a matter of allowing them to do that. It would be a temporary measure.
So you are in favor of at least a temporary measure to modify Section 171 of the Collins Amendment to allow them to handle those increased credit demands.
Yes, and we'll be happy to work with you on the details of that.
That would be terrific. I thank you so much. The Federal Reserve has noted that non-bank financial institutions are currently not considered eligible lenders for any Main Street loan facility. And in the FAQ guidance, it states that you may consider expanding the list of eligible lenders in the future. Chairman Powell, what is the reasoning for the Federal Reserve excluding non-bank and non-insured depository institutions from being eligible lenders under the Main Street lending program? You know, is it not possible to create a lender agreement similar to one that we issued by the Department of Treasury for non-bank and non-insured depository institutions like we did for the Paycheck Protection Program?
No, it is possible. It is possible. We've been engaged in a sprint here to get these programs set up. And so that's what we've been doing. It's a little bit, I would liken it a little bit to like Dunkirk, get in the boats and go. Bring the people back. That's really what we've been doing. So in the case of this, now that we've done that, we can go back and we can look at various provisions, including the one you're talking about.
Well, my time has expired, but I hope you do take a careful look at that and that we're also able to modify the Collins Amendment. I thank you, Madam Chairwoman, and I yield back.
Thank you. Mr. Perlmutter, you're recognized for 5 minutes.
Thank you, Madam Chair, and Chairman Powell, thank you for the hard work that you and your staff in the Fed have put in very difficult circumstances. And taking a look at your monetary report, just if you look at the first 4 graphs in the report, the last few years you've been here, or Chairman Yellen, they've been sort of consistent, steady growth since the Obama administration into the Trump administration. And now I know the definition of falling off a cliff. Those graphs are very telling in the loss of jobs that we've seen. So my first question to you, sir, is in the HEROES Act, there is a substantial appropriation for state, local, and school districts who've seen their tax revenues fall tremendously. In Colorado, this is state government alone is looking at a $3 billion drop in revenue from last year. So I know you're not particularly interested in talking about fiscal measures, but if in fact we weren't to assist state, local, and school districts over the course of the next year or two, and thousands of jobs are lost, I mean, how is that going to affect the recovery that you hope for?
So I will agree that I wouldn't offer specific advice on fiscal policy. I will say, though, from an economic standpoint, state and local governments employ something like 13 million people. States have to balance their budgets, and when revenues go down and expenses go up, what do? They cut costs. And we've seen state and local governments lay off already 1.5 million people. State and local governments provide essential services, as we all know. So, they're a very large employer, and I would say it's certainly worth considering all of that. It will hold back the economic recovery if they continue to lay people off and if they continue to cut essential services. And in fact, that's kind of what happened post the global financial crisis.
All right, and so I thank you for that. I mean, I guess I'm going to summarize your answer. Laying off a lot of people will not help the recovery. And I saw today, even a substantial company like AT&T announced it's laying off thousands of people as part of a restructuring or something. I didn't read the entire article, but I have in your report on the second page, it says the strains on household and business balance sheets from the economic and financial shocks since March will likely create persistent fragilities. What did you mean, or whoever wrote the report, what did you mean by persistent fragilities?
So this is what we mean by that. Something like 25 million people have been displaced in the workforce overall, either fully or partially. And those people right now, they're getting enhanced unemployment insurance, perhaps. Many of them may have gotten support checks as part of the CARES Act. But over time, they don't have a secure income flow. And when to the extent they lose those benefits that they're getting, they're going to come under financial pressure right away. Most low and moderate income households don't have substantial financial assets to fall back on. And it's the same thing with smaller businesses. They don't tend to have substantial quantities of financial cushion to fall back on. And that's what our surveys show, both for households and businesses. So they'll be under strain. And of course, the prospect of facing that kind of strain is already strenuous and causes people to pull in their spending. And those are the kind of things that, become self-reinforcing for the economy.
So you put together 11 different facilities and, from corporate bond purchases and municipal and all those kinds of things. Is there anything that you would like to do from a monetary and the position of the Fed that the Treasury or the administration has prevented you from doing?
The answer is no. We have very specific powers, which are lending powers. In addition to our regular monetary policy powers, we have lending powers that we've used to a completely unprecedented extent here. And I think we've been able to broadly do the things that we felt were most in need of doing. Of course, the powers that are going to matter so much going forward and have already mattered are really the tax and spending powers.
Well, I thank you for your testimony and your work, sir, and I yield back to the chair.
Thank you, Mr. Rose. You are recognized for 5 minutes. Mr. Rose is not present. Then we'll go on to Mr. Stile. You're recognized for 5 minutes.
Hello?
Is this Mr. Stile?
Can you hear me?
Yes.
Okay. I was talking, Chairwoman, if I can begin?
Yes, you may begin.
Okay. Thank you, Chairwoman Waters and Ranking Member McHenry, and thank you, Chairman Powell, for being with us today. As we move through the pandemic recovery process, I am really encouraged by the early economic results. Obviously, we still have much further to go, but again, I'm encouraged. And I credit the administration led by President Trump and the institutions like the Fed and your leadership for helping us to so quickly work to revive the economy. However, I received news yesterday that makes me a little less encouraged and more concerned. I received a call from a bank here in Tennessee's 6th Congressional District yesterday, alerting me to the fact that they have been notified at the beginning of this week by the Fed that they would only be receiving a small portion of their weekly order of coinage. According to this banker, his institution will likely run out of coins by Friday of this week or this weekend. And after some preliminary research, I found that many other banks across my district are having the same operational challenge. My fear is that customers who use these banks will react very poorly. And I know that we all don't want to wake up to headlines in the near future such as banks out of money. Chairman Powell, I wonder, are you aware of this issue and what is being done to mitigate it?
Thank you. Yes, I am aware of it. I'm very much aware of it. And let me say, what's happened is that with the partial closure of the economy, the flow of coins through the economy has it's kind of stopped. The places where you go to give your coins and get credit at the store, get cash, get folding money, those have not been working. Stores have been closed. So the whole system of flow had come to a stop. We're well aware of this. We're working with the Mint and we're working with the reserve banks. And as the economy reopens, we're seeing coins begin to move around again. So if the bank hasn't already done so, they should certainly be in touch with their reserve bank to report this situation. And we've been working on this problem, and very much appreciate your bringing it to our attention. We feel like we're making progress, but it's been something that we've been working on.
Chairwoman Waters, I'd like to submit for the record this release from the Fed, strategic allocation of coin inventories.
Without objection, such is the order.
Chairman Powell, I wonder, and to some degree you've already spoken to this, but is this indicative of a larger issue? And is it temporary, or is this point to a larger structural issue on this particular matter?
No, we believe it's just temporary. It's due to the fact of the economy being in significant part closed, as I mentioned, and the flow of coins through the economy. Something that the reserve banks and the banks think about it all the time, but now we're beginning to see those shortages. We've been aware of it. We're working with the Mint to increase supply, and we're working with the reserve banks to get that supply where it needs to be. So we think it's a temporary situation.
And if you would give, I guess, the banks that I'm talking with, like the one that I mentioned in my district, what would you suggest they do to deal with this issue? And I'm thinking particularly not only about the banks, but their customers, businesses, and the consumer who is going to be faced, all of these institutions and individuals are going to be faced with the prospect of having to round up or round down. And in a time when pennies are the difference between profitability and loss, it seems like it might be a bigger concern than the announcement from the Fed would indicate that it is.
So I would encourage your banks to get in touch with their reserve bank. I don't know whether you're Atlanta or St. Louis, but whichever, it may be both in your district. I don't know, but in any case, they're responsible for this, and we're working hard on it.
Thank you, Chairman. I would just encourage you maybe to put out some more robust guidance for banks so that they don't feel the banks that I've been speaking with all have the opinion that they don't know what to tell their customers. So I just encourage you to maybe put out some more robust guidance to them.
I want to thank you for bringing that up. I'll certainly do that.
I am a co-sponsor, along with several other members of our committee, of H.R. 2650, the Payment Choice Act of 2019, a bipartisan supported bill which would require merchants to accept cash. This legislation, I believe, is critical because parts of the country in both rural and urban areas are more dependent on the cash economy. I see that I've run out of time, but I would encourage my colleagues to take a look at and support this bill. Thank you, Chairman Powell. Thank you, Chairwoman Waters. I yield back.
Mr. Hines, you're recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Chairman Powell, for being with us today. And thank you for your extraordinary efforts and the efforts of the Federal Reserve to contribute to the emergency rescue that we've all witnessed. I've got at least two concerns, though, that I want to explore with you. And the first pertains to who was the beneficiary of the billions of dollars, trillions of dollars that have been mobilized in the rescue. Chairman, as you know, a company can do three things with its money, right? It can buy stuff, cost of goods sold, rent, insurance, space, raw materials. It can pay wages, keep people employed. And third, it can service its capital structure. It can pay interest on bonds or to banks. It can issue dividends. Chairman Powell, as you know, in the Paycheck Protection Program, we set up an explicit incentive that money be used for wages. My first question, Chairman Powell, is let's start with the primary market corporate credit facility, where you're actually lending directly through the issuance of securities to corporations. Is there any incentive or requirement that recipients of that aid preference the payment of wages over the service of the payment of interest or the purchase of stuff?
I'll put it this way, there's nothing in the CARES Act. The CARES Act specifically exempts the transactions that take place in the primary market corporate credit facility from those requirements. They do apply to direct loans. Actually, no, different requirements apply to direct loans. You're really talking about the requirements of the Paycheck Protection Act.
Yeah, no, I mentioned the Paycheck Protection Program obviously explicitly created an incentive for the use of that money to pay wages and therefore keep up employment. It doesn't sound like the Fed lending, the primary market corporate credit facility, has those protections. But let me ask you to reflect, and I can't run through all 11 programs, but the commercial paper funding facility, the primary dealer credit facility, the money market mutual fund credit facility, all of these credit facilities, are there any terms in the availability of that liquidity that preferences the payment of wages over the servicing of debt by corporations?
No, there aren't. And, we're implementing the law that you passed. The CARES Act specifically does not apply those things. And we don't think it's up to us to kind of rewrite the law to achieve goals we might have. This is negotiated carefully as part of the legislative process.
I mean, having lived through the political fallout of the TARP program, when America saw the banks and the auto companies bailed out and the preservation of an awful lot of the shareholders and the bondholders associated, I'm very sensitive to programs that ultimately use public money to allow corporations to avoid bankruptcy and service their debt and ultimately pay dividends. So I just commend that to my colleagues as something of real concern, because when the story is told here, I think a lot of private, and I'm not just talking about corporations, I'm talking about the car wash guy down the street who got who qualified for a loan. A lot of that money will have been used to keep banks solvent, to preserve loans, and to service bonds. Chair Powell, I want to explore another deep concern I have about these. As much as I support your efforts and the Federal Reserve's efforts to bail us out here, in my 1 decade plus or minus doing this is now the second time in which it has been necessary for the government, the Federal Reserve, and fiscal policy to step in a truly massive way to bail out the economy. 10 years ago, it was the banks, it was the auto industry. Now we're seeing the airlines, and the list goes on and on and on. And the worry I have, which relates to my first worry, is that actors in the private market, and I was once in the private sector, are going to decide that they can take on a lot more risk, repurchase shares, dividend capital, because when the going gets tough and catastrophe hits, we'll be there to bail them out. So I want to use my last, 40 seconds or so to ask you to reflect on whether you think that the activities of the last 6 months and of the last 10 years have created significant moral hazard in our market system.
So let me first say that, of course, the intended beneficiaries of all of our programs are workers, and we're able to keep their jobs because companies can finance themselves. So that's really the point of it. No, you raise a good question, and I would certainly it's a concern, and that's why, generally look for ways to insert ourselves into markets when they're functioning. This is a world historical event unlike any other. The situation that happened is one where we really felt like we had to come in with all of our tools as aggressively as possible. And I don't regret those decisions. I do realize that's why I always say that we'll put the tools away. And I take it very seriously. You know, ultimately, in a free market, in an economy like ours, you should get the benefits of your success and the cost of your failures too. And that's the way it should work. So,
Mr. Stahl, you're recognized for 5 minutes. Mr. Stahl, present? If not, Mr. Taylor, you're recognized for 5 minutes. If not, Mr. Lucas, you're recognized for 5 minutes.
My cursor to the right spot on the screen, Madam Chairman. Thank you.
Thank you.
Chairman Powell, for 5 years, I've worked very diligently in an effort to unlock at least $45 billion in capital to be available to the economy. And without me saying any more, you understand where I'm headed, the inter-affiliate margin rule. I hear rumors that we might be getting closer to such a rule being announced. Any insights you could provide on that?
I'm happy to be able to confirm those rumors. We are indeed getting close, and I can't give you. I've been under strict orders not to give you which I will obey, not to give you an actual date. Nonetheless, it's very clear that we are. It's been a long road. I will agree with you, but we'll get there very soon, I'm told.
I've spent enough time on farm bills. I have enough patience. I'll wait you out. The knowledge we're making progress is really important. That said, Chairman Powell, there have been a lot of comments made about the nature of the programs that have been put together and the way the Fed has addressed this unprecedented set of challenges that we've had in the first part of this year. That said, in your experience as a Fed chairman, in your academic training, could you ever have imagined a pandemic of this magnitude with this kind of economic impact, not just on the United States, but around the world?
I certainly didn't. You know, like everybody else, I was aware that there were things called pandemics and that they could have consequences. But, you essentially had all over the world governments and people sort of deliberately stopping a lot of economic activity. And we'll see declines in economic activity that just are beyond any in living memory because of the disease. It's akin to a natural disaster. So, so I really do think this is a once in a life. I certainly hope it's a once in a lifetime event. And I hope market participants don't grow to think of it as something where we'll react to any old thing.
Absolutely. And you and I have discussed many times before, coming from my part of Oklahoma, the Great Depression in the 1930s, the Dust Bowl, the dramatic effect of Fed policy in 29 and 30, and Congress's policies, the administration at that time's policies that made things so dramatically worse. 3/4 of the population of my home county went away and has never come back. It is fair to say that doing what we in Congress and what the Fed has done, what Treasury's done, unprecedented as it may be, still is dramatically cheaper than a lack of action. Fair assessment, Mr. Chairman. Putting the economic train back on the tracks costs a lot more than keeping it on the tracks.
I feel very strongly that way. I really do. And, we're going to come out of this. And the more we do now, the stronger our economy will be, the better we're able to keep people working, get tax revenue back up, and have a strong economy to pull us forward and service the debt. We're going to come out of this with more debt. So our banks are going to have taken losses. Households will have run down their capital. Everybody will. Nonetheless, the economy will be stronger, and that'll help everyone.
And ultimately, Fed policy will reflect that new reality, as will fiscal policy in the United States Congress have to reflect that new reality. The piper will have to be paid ultimately. But having that bill to pay is how we get to the point of being able to pay.
That's right. And that's why I think this is not a time to worry too much about, the longer run fiscal situation. We'll have to return to that, but I would say this isn't the time to prioritize that.
One last thought, representing a substantial part of the rural area of Oklahoma, making sure that Fed programs work as well in the countryside as they do in the money centers in the big urban areas is critically important from my perspective. Making sure those facilities are available to everybody helps assure the robust recovery. We don't want to leave any particular regions or parts of society behind as we come out of this. And I believe you're working aggressively in that area.
We have tried to, and in fact, I would point to the things we've done with the municipal facility, where we made sure that states that have more rural populations and don't have a lot of big cities, nonetheless, have the benefits of that facility. And we will continue to adjust all our facilities to try to serve that goal.
With that, Madam Chair, I yield back the balance of my time.
Thank you. Mr. Heck, you're recognized for 5 minutes.
Thank you, Madam Chair. I'd like to start by thanking you for setting up the phone call the other day with Chair Powell regarding the issue of commercial real estate and the future of that market and its importance. I don't have time to get into that today, and I wish I did, because we still have a problem, and I'm ringing the alarm bell again. Since I was privileged to join this committee nearly 8 years ago, I've asked at every single Humphrey Hawkins hearing, when does America get a raise? The truth of the matter is that for far too long, indeed I would suggest 40 years, we have been content, and some people have supported, frankly, running the economy short of its potential. I remember when I got here that there were people both on and off the FOMC that thought if we ever dipped below 6% unemployment, it would trigger inflation. And then it was no, not 6, but 5.5, 5, 4.5, 4. And what we know is that we ran this economy between 3.5% and 4% unemployment for 2.5 years. And we maintained, in fact, we were short of the price stability target. The fact of the matter is that during your tenure, Mr. Chair, and I tip my hat to you, sir, you've opened people's eyes about the importance of a tight labor market. You did this yesterday in the Senate, you've done it again here today, and you've done it in public utterances. And we cannot thank you enough. Well done, sir. You have pointed out, rightfully, that tight labor markets help with wage growth, but especially with employment levels and wage growth for people at the lower end of the income spectrum. Again, I want to thank you. But the fact remains, Mr. Chair, that the mission of the Fed is no different today than it was over 2 generations when it never allowed the economy to operate at a tight labor status. The law hasn't been changed and the rules and regulations haven't been changed. So we're going to get past this some point, and the sooner the better. But my question for you is, short of you having a lifetime appointment, which, by the way, I would support, sir, but short of you having that, how can we be assured that what you have so appropriately pursued will continue? And I want to preempt you a little bit, if I may, Mr. Chair, by saying every federal entity in the history of civilization has resisted opening up the underlying authorizing act for that entity. And the Fed's been no different in my conversations with them. To some degree, I get that. I mean, it's as though you're channeling Will Rogers, who said once, people feel about Congress the same way they do when baby gets a hold of the hammer. You're worried about what might happen if we opened up that act. But there is no assurance that what you have rightfully pointed out, what you have rightfully pursued, will continue to be pursued. How do we assure ourselves that what you have figured out and what you have led the Fed to do will continue into the future if we don't change the law, sir? Did I stump you, Mr. Chair?
I forgot to unmute myself. Sorry. So I actually think the law, as written, does accommodate what we've really learned, what a lot of us have learned, and that is that. For many years when we were growing up, inflation really was a problem. People weren't imagining that. They really had to watch carefully, or inflation would move up and it would hurt, people on fixed incomes more than anybody else. So, and what we've learned is that, these disinflationary forces we've been seeing around the world for a quarter century, that they're here to stay for a while, and that, we live in an era of continued downward pressure on inflation. That gives us the ability to have very low levels of unemployment. I don't think anybody's going to unlearn that. I also don't think it's going to be, if you change the law to, the situation will change. The economy is ever evolving, and I don't know that changing the law is what we need to do. I do think we get that, and I think economists broadly do get that now, and that's why we're so eager to get back to where we were and below. We weren't seeing inflationary pressures at 3.5%. What we saw was the gains in wages going to people at the lower end of the wage spectrum for the first time in a very long time. I can't tell you how much we want to get back there and how fast we want to get there. So we'll be using our tools that way, and that's really how I look at it.
Thank you again, sir, for your leadership.
Thank you
very much. Mr. Stahl, you're recognized for 5 minutes. Mr. Stahl available? If not,
we can't hear you, Brian.
Mr. Stahl, are you recognized for 5 minutes?
He's talking, but we're not hearing.
Yeah, can staff look into whatever technical difficulty there is, because he's unmuted, it appears.
So let's see, we have a little technical difficulty here. We're checking with our staff.
To the testimony of the Federal Reserve Chair, Jay Powell, to the House Financial Services Committee, and your hearing chair, Maxine Waters, she's trying to call on one of the members, Congressman Stahl, and she's done it several times, and they're having some technical difficulties now trying to get him. He is going to ask his 5 minutes worth of questions. We've been hearing a fair amount from Chairman Powell about, they've been asking about the need for further fiscal stimulus, which he allows that there may well be a need for it. They've asked a lot of questions about the specifics of the various financing arrangements that they're going through at the Fed, how they're going to work, whether they really support employment or not. One of the points that the chair has made repeatedly is their main goal right now is to get a tight labor market again, which will benefit the less fortunate. Now we're going to go back to the hearing before the House Financial Services Committee, where Chair Jay Powell is speaking.
Underpin our markets and to minimize the damage to our economy. It's amazing to see what you've done, the impact it's had, and we certainly appreciate all your efforts. Thank you very much. With regards to my questions, in your most recent monetary policy report, you stated how lending standards for both households and businesses have become less accommodative, and borrowing conditions are tight for low-rated households and businesses. What I think you're seeing is financial institutions are beginning to look 3 or 4 months down the road and preparing for regulators and their exams to come into their institution after this period of forbearance and begin classifying loans and force banks to reserve against those assets. I can tell you from talking to bankers across the country that if the regulators do not give forbearance to these financial institutions, and they start forcing institutions to classify whole lines of business, classifying whole lines of business, there's going to be a real problem with a credit shortage in rural areas and in low MI communities. Do you believe the regulators should be providing this forbearance, and what do you think it should look like?
So we are encouraging our supervisors to encourage banks to work with their borrowers and not to jump to criticized loans, and to take on board, the situation that we're in. And we're communicating with them, a lot in that respect. And I hope that's getting through to the banks, and that it's in fact been getting through to the borrowers. We don't want to force anything to automatically happen. I guess it's natural that in a situation like this, where businesses are partially closed or people aren't spending, you'll see concerns about credit. But this is clearly a temporary period, and we're just going to continue to urge banks to work with their customers, household and business customers. And
I appreciate that comment, sir. But and your earlier comments talked about some businesses struggling and the need for forbearance, and I appreciate that. But I can tell you, having gone through this PPP program, that the banks, with their accountants and attorneys close at hand, are very reluctant to do anything unless there is some physical guidance there, some words on paper that they can point to. And so I've got a bill to try and put something in place that they can point to give them the kind of forbearance and protection they need to be able to then give forbearance to the customers. My greatest fear is we wind up with a situation like 08 and 09 where the regulators go in and get rid of entire lines of business, close down entire industries, and hurt local communities and wind up losing banks in the process. We can't do this in this situation. It's true broad-based. If we do this, we're going to never get out of this economic downturn. And I'm very hopeful that you'll work with us to try and come up with a solution to make sure there's something that the banks can point to provide the kind of forbearance they need, the certainty they need to be able to manage their customer base.
So we're trying to give them that, and we're also doing additional training of supervisors. And I just point out too that banks came into this quite well capitalized, and so that helps as well. There's going to be some more guidance, though, interagency guidance on post-pandemic exams and how we conduct those. So we're working away at it, we really want to hear from banks and from supervisors and anybody who to the extent it looks like this is not getting through, because we really don't. This is effectively a natural disaster, and we want to treat it like that.
Just a quick comment here. I know that the Secretary Mnuchin made a comment the other day that he's seeing an increase in deposits. I know anecdotally, locally here, there's the local banks in the area here. Looks like there's 10-20% increase in deposits. Savings have increased. Have you seen that same thing happening? What do you ascertain from that as to why and what kind of effect down the road it will have on the citizens of our country having that sort of money at hand ready to be spent?
Well, part of it is, the answer is yes. We're seeing a lot of that. And you saw it in the income data where people are holding just very, very high levels of savings right now. And part of that is that they're getting, the PPP loans, and some of those turn up in personal bank accounts. It's also the enhanced unemployment insurance, and it's the checks. And they've been holding back. I think getting to your point, what it is evidence that there's a lot of spending power, and we're starting to see that in the spending data too. Yes, I think it bodes well for the next few months.
Thank you. I yield back, Madam Chair.
Thank you, Mr. Vargas. You're recognized for 5 minutes.
You're listening to Bloomberg Radio as we cover the testimony before the House Financial Services Committee of Fed Chair Jay Powell. They're asking about the various actions, extraordinary monetary actions that the Fed has taken to support the economy, led by the chairwoman. She is Maxine Waters, Democrat of Los Angeles. And now we're going to go back to the hearing. This is once again Jay Powell, Fed Chair.
During and immediately following the financial crisis of 2009, the Federal Reserve's balance sheet grew by north of $2 trillion, reaching about $4.5 trillion. In your comment following up to Congresswoman Ann Wagner's question, you noted that the Federal Reserve has been mostly holding to maturity. Wondering if you could comment what the economic indicators that you were looking at the Federal Reserve between 2009 into 2019 as the Federal Reserve dropped the balance sheet by roughly half of $1 trillion, and whether or not those same economic indicators will be guiding you as you make determinations in the Fed as to whether or not you'll be needing to hold those reserves all the way through their maturity, or if there will be opportunities to reduce the Fed's balance sheet in advance of that maturity.
So we waited until the economy was well down the path of recovery before we even thought about starting to shrink the size of the balance sheet. And the other thing that we did was we froze the balance sheet. At the end of 2014, we froze the size of the balance sheet, pardon me, for a period of 3 years, so that the economy was growing and therefore the ratio of the size of the balance sheet to the economy was declining. And I think we declined from maybe 25% of GDP to maybe 17, 18%. So that's a passive way to allow the bank balance sheet to shrink relative to the economy. I think in this situation, you know, we're thinking that we may do something like that, but it's so far down the road. You know, I think we're at the beginning of the second phase of this process, the one where the economy begins to recover from the shutdown period, and that period will take some time, and then there'll probably be a lengthy period as we get back to full employment. So it'll be a while before we start really thinking about how to shrink the balance sheet. And I would say that at current levels or current planned levels, you know, I think we know now that the balance sheet doesn't present issues in terms of either inflation or financial stability. Those were big concerns as we grew the balance sheet during the last crisis.
Obviously, we don't have the inflationary pressures today. I do hold some concern that we may see inflationary pressures in the future as the Fed's balance sheet has now increased beyond $7 trillion. And obviously, you and your colleagues at the Federal Reserve will continue to watch that. Let me shift gears slightly. We've seen articles recently related to collateralized loan obligations, risks that may pose in the banking sector. I think what's important here to note is banking institutions came into this crisis with a much healthier balance sheet than they did in 2009. There was recently an article that was put forward identifying potential risks in the collateralized loan obligation space and indicating that banks may have broader systemic risk. Could you comment as to whether or not you hold that view, or whether or not you believe banks came in with a strong balance sheet and are therefore well capitalized to weather these challenges?
Sure. So the CLOs are quite different from the things that were problems back in the crisis. We have a lot of transparency into what's inside the CLOs. We regularly include them in our annual stress tests. We stress them really hard to see what kind of losses they produce. And they're also, you know, they're not that large. You know, I think it's less than 0.5% of the assets of the banks are in these CLOs. So it's something if they contain leveraged loans, we've been all over that problem for several years and looking at it carefully. So I think the comparison to the global financial crisis is not the right one. Nonetheless, it's an issue we will continue to monitor.
I appreciate that, and I appreciate you monitoring that, as well as the increases in the Fed's balance sheet and the risk that may pose to inflation down the road. I appreciate you being here today, and I yield back. Thank you.
Thank you. Mr. Vargas, you're recognized for 5 minutes.
You're listening to Bloomberg Radio, the testimony of Fed Chair Jay Powell before the Financial Services Committee of the House. That is Maxine Waters. She is the chairwoman of the committee, Democrat from California. They're having a little bit of trouble, like many of us are, actually, on this sort of Zoom approach to meetings. They have them all in remote locations coming in electronically. They're having some trouble, technical problems, getting them all lined up. Sooner or later they get to it, but we're going to go back now to the hearings.
These are difficult times that we're in. For the second time in a dozen years, we're in a severe recession. I believe that in May, we saw that 20 million less Americans had jobs than they did 3 months prior. So unemployment's at its highest rate since World War II. And the Fed's projections have that remaining at almost 10% through the end of the year. We've also discussed, to make matters worse, that situation appears far worse for lower income workers than it does for others who are making more. Chairman Powell, you've somewhat alluded to it today, and I believe yesterday, I think you said you've been concerned about the overall deficit for the long term, but that the time to address that is when the economy is strong, not when we're in an economic crisis. Is that correct?
I'm sorry, I forgot to unmute myself again. So yes, I do think that ultimately the debt can't grow faster than the economy forever. That's sort of the definition of an unsustainable path. We've been on that for a while now, and we need to address it. We will have no choice. Ultimately, we have to address it. The time to do that is when unemployment is low and the economy is growing.
Thank you. I couldn't agree with you more. Obviously, each recession is different, but I want to take a look back at the last one to see what lessons we learned, to see what we can look at to help deal with this one. I had an opportunity back in the 2009 stimulus bill timeframe that I know we devoted about 20% of that total aid to fiscal support for state budgets, and that's when I was working at the state of Iowa and in charge of supervising some of that funding. One thing that I saw was that when that assistance started to end in 2010, because of balanced budget requirements that we have, for instance, in the state of Iowa, we had to cut budgets, meaning teachers, firefighters, public servants, etc., lost their jobs. And then I've also seen some research from the International Monetary Fund and others showing that these cuts were a drag on the economy for several years afterwards, and some of those estimates showing that the jobs lost due to these cuts actually offset the job growth in the public sector entirely. Does that impact seem like it might be part of the reason why the recovery from 2008 recession was so slow?
Yes, that is a finding that economic research has come up with, I think, pretty clearly.
I appreciate that. It seems like we're in agreement that supporting state and local budgets is a key step to supporting the recovery process. I know we're absolutely trying to work on getting that piece through the House, and it's something that I've worked on. Do you think that that's something Congress needs to be doing more on to make sure that we recover our economy?
So, as you point out, state and local governments are large employers, and they provide critical services to people, and there's a balanced budget provision effectively in every state, or almost every state. And so when there are budget problems, what happens is you see layoffs and cutbacks in essential services. Both of those create not just human misery, but they also weigh on the economy. So I do think it's an area where for Congress to look.
Well, thank you. Obviously, we're trying to push that through. I actually have a bill that I wrote previously that directly supports state and local governments for lost revenue to ensure that these job cuts don't happen again. I appreciate all that you're doing to help us shore up our economy at this point, give us the guidance and the oversight that we need. And I'm grateful for your feedback here today. I hope that we can move a state and local government bill forward. Thank you so much, and I yield back.
Thank you. Mr. Huizinga, you're recognized for 5 minutes.
Thank you, Madam Chair. I appreciate it. And I, like the ranking member, just think of our mutual friend, Andy Barr right now and his daughters. And I know, Chairman, he would love to be here to grill you about a number of issues, as he and I had both previously chaired the Monetary Policy and Trade Subcommittee. But I need to touch base on the Paycheck Protection. Two things. Main Street business that is not eligible for the Paycheck Protection Program. And as you well know, a huge part of our manufacturing economy is in automobiles, especially automobile parts. Those account for about 900,000 jobs, 125,000 of those here in Michigan alone. And what we are seeing and hearing from the large automobile manufacturers is their concern for their suppliers. And those suppliers are telling me, which I have a tremendous number of here in the 2nd District of Michigan, that they're having some liquidity issues. Not that they don't have
been properly funded previously, but it's about liquidity right now. Last month, I joined with my Michigan colleagues in asking the administration to create a fund that provides short-term lending assistance to medium-sized companies in the motor vehicle parts sector using necessary capital from the Main Street Lending Program. Now, you had said, and I had written it down, I think you had said we are there in standing up the Main Street program. I'm not as convinced, I guess, of that, and I'd like to make sure that you can commit and maybe clarify what that means. We need to have this up now. And what I really want to know is, will you commit to working with Treasury Secretary Mnuchin to add a dedicated program for the auto part sector focused on size companies to keep production for key links in the motor vehicle part manufacturing viable? Because if we lose them, that is going to be a huge part of our to be hit. And I wonder if you'll commit to working on that.
So the facility is open now for lenders to register. So those companies will have banks that they work with that are their regular partners in business, and those banks should be in the process of registering with the Boston Fed to become an approved lender in the Main Street facility. At that point, they can make Main Street loans right away. And, very shortly, they'll be able to put 95% interest in those loans. So we're there. Effectively, if their banks are...
How about a separate facility within that program?
We try to set... We don't do facilities for individual industries. What we do is we set... the requirements that we've set up should be a very good fit for the companies you're talking about. Essentially, we're looking at 2019 financials, and you can borrow at a multiple of your 2019 EBITDA. So, and that could either be 4 or 6, depending on the kind of a loan you want, and the kind of company it is. But so they would be a perfectly good fit for this facility. And we don't do facilities that are designed for individual industries. We do facilities of broad applicability, and anybody who meets those requirements can borrow.
So I hear no specific program dedicated to the automotive industry, correct?
That's right.
Okay. I think that's a mistake. However, I need to move along to another unintended consequence, I believe, as part of the Paycheck Protection Program, and a company that is not able to take part in that, but is waiting for this Main Street Lending Program. I have a company here in Michigan, in the district, that probably many of my colleagues have had their product, Lacombe. It's coffee, and a 26-year-old, very fast-growing company that has manufacturing facilities here, a couple of hundred constituents, but they're all based in Philadelphia. For the last 6 years, they have been focused on growth, and they also means they've had to borrow funds, to which has led to accumulation of quite a bit of debt. The rules are currently written so that Lacombe would not qualify to participate in the Main Street Lending Program. I believe the way that the leverage ratio requirements in the program is currently drafted, it unfairly punishes companies such as Lacombe that would otherwise be viewed as true American success stories when using different metrics. If the rules are currently written, it's designed to prevent funds from going to the companies that need them most. And I understand that you're not wanting to deal with over-leveraged companies being bailed out, but we're talking about growing companies that have had to accumulate debt. I'm working on with some colleagues a bipartisan letter that would help that. So we'd appreciate it if there would be a different ratio, 1-to-1, independently appraised within the last 12 to 18 months, and the ability to access that. Or to hearing from you offline on that.
For either of those kinds of companies, if we're missing something, then we want to understand that, and we've been willing to adapt these programs consistently. So we'll look forward to talking about it.
Wonderful, thank you, appreciate it.
Thank you, Mr. McAdams. You're recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chair Powell, for being with us and for your leadership during this difficult economic situation due to the coronavirus. So, Chair Powell, since the last time you were before this committee, the OCC moved ahead with its rewrite of the Community Reinvestment Act, or the CRA. In light of the renewed focus by Congress to address racism and systemic issues throughout our economy and throughout our nation, I think it's particularly important that we get the CRA correct. And since its historical purpose was to address redlining against Black and minority individuals and communities, and to have financial institutions meet the credit needs of these communities. So I think many of my colleagues share my concerns that the OCC's rule misses the mark and probably does more harm than good. And I'm glad that the Fed did not sign on to the rulemaking. In January, Governor Lael Brainerd gave a speech on how to strengthen the CRA. And in that speech, she said, quote, "By sharing our work publicly, we hope to solicit public input on a broader set of options for reform and find a way forward, a way toward interagency agreement on the best approach." So now that the OCC has finalized its rule, is there any update that you can provide for the committee on how or when the Fed may move forward on any of the public input it received on its CRA framework?
Sure. So, first of all, CRA is for us a extremely important law, and we agreed that it's a good time to update it. We would want to update it in a way that has broad support among the community of intended beneficiaries. That's always been our one non-negotiable condition for it. So we're still working on it, and I do think we'll move forward with it. I don't have much for you on the timing of it, but there's been a lot of great work done, and I like where we are on it in terms of the things the ways we've been thinking about it, modernizing it. We will ultimately move forward, and I can't say exactly when, but we're not going to let that work go to waste.
Thank you. We look forward to hearing more about that and following that. Next question. My perception is that Congress and the Fed has done a decent job of keeping the economy on life support. We clearly aren't doing great yet, and the response has been uneven. But you have double-digit unemployment numbers and higher unemployment rates for African Americans, for instance, and some sectors are hit harder than others. I think Congress has the option, we had the option when this pandemic broke out, of acting quickly or acting perfectly, and I think we chose to act quickly, and I think that was the right call. But by my calculation, the Fed has allocated a little over $200 billion of the $454 billion that Congress allocated to the Treasury and Fed in the CARES Act. Some of that funding was set aside for the Main Street facility that you've already discussed and other facilities. My question is, how do you intend to use the remaining funds? I understand that it takes time to set up various facilities, but I also worry that if we don't move fast enough, then business and individuals and communities may suffer as a result.
First, let me agree that I think the fiscal actions that you took were incredibly timely, and I think will be very well judged over time. Even though, of course, nothing's perfect. It's an emergency. You do the best you can. I think, the PPP program, the UI program, the checks, I think all of it's going to wear well over time, and it's certainly helping the economy now through what could have been so much worse of a situation. In terms of the rest of the CARES Act money, it's there when and as we need it. We have a lot more ability to use our lending powers should that be necessary, should it be appropriate. We're certainly willing to do that. I think we've kind of gotten to maybe the end of the beginning here, and now we're getting into the phase of the reopening of the economy. But that money is there if it's needed. Of course, the Secretary of the Treasury actually has the legal authority to deploy that money as he sees fit. But it would be one of the things he can do is put it in our programs, and we stand ready to do more if more needs to be done.
Do you see that essentially as being more of the same as necessary, or is there anything else you're looking at? Any other gaps that keep you up at night?
So I think we've covered now we've got nonprofits now in Main Street. That'll take us some time. We've got small, medium, and large companies. We've got state and local governments. So I think we've covered a lot of the waterfront. We're always open to additional ideas. Mainly, it's a lot of execution now and just continuing to improve what we've done, make it do its job better.
Thank you. I yield back.
Thank you. Mr. Vargas, you're recognized for 5 minutes.
Thank you, Madam Chair, and can you hear me?
Yes, I can hear you, Mr. Vargas.
Just want you to know that I never abandoned you. I was here the whole time. My microphone wasn't working. It was sad note to hear the news of Andy's wife and family. Andy's a friend to all of us, as you know. He on our side too. We love him, and that's really tragic. And I know that we'll all keep his wife and his family, especially now, in our prayers. And again, thank you, Mr. McHenry, for letting us know. I don't agree with Mr. Heck that Mr. Powell that I'm in favor of a lifetime appointment for you. I wouldn't do that to you. I wouldn't shorten your life like that. If you're too much of a good guy, that wouldn't be fair at all. But I do have to commend you. I think that, you're one of those, what I would call those Republicans of old, stable, dignified, intelligent, fair, charitable. And I think everyone's been looking to you for guidance. And I think that you've been just the right person at the right time. And again, I do want to commend you. And I also want to commend you for highlighting the disproportionate impact that this pandemic has had on communities of color, Latinos, African Americans, and especially the poor. My district is composed of all of Imperial County, which is a border county here to Mexico, and part of San Diego County. Over 70% of my district is Latino. The unemployment rate in Imperial County is a striking 28% in April. That's what it was. And that's basically the same rate that we had during the Great Recession there, 25 to 30%. And the Bureau of Labor Statistics currently states that as of April, the unemployment rate in San Diego County also increased to about 15%. Taking a closer look specifically in the areas I represent, such as San Isidro, which is right on the border, National City, the next little city up, Chula Vista, the next city up, and then the city of San Diego, the unemployment here in April was about 20%. The disproportionate impact of this pandemic on our economy is clear in my district. What policies has the Fed pursued specifically on reducing the high rates of unemployment for African Americans and Latinos during this pandemic? And what policies has the Fed put in place to help ensure that Latinos, African Americans are not suffering from this disproportionately high unemployment rates as we emerge from this recession?
I'm tempted to say that all of our policies are focused on that problem. The way this pandemic worked is it hit companies and parts of the economy that were service economy companies, which involved getting people together in tight quarters and either feeding them or giving them drinks or flying them around or entertaining them. And those are service jobs, which happen to be overly represented. The workforce happens to be consist to a large measure of low and moderate income communities and minorities. So an extraordinarily large portion of those laid off are from those parts of the economy. And of course, it has, as the numbers show, fallen heavily on the Latin population as well as African Americans and women. So we, the tools we have are the tools we have. So we're supporting the flow of credit in the economy to companies so that they don't feel financial stress. We're trying to create an environment in which people have the very best chance to go back to their old job or to get a new job. That's really what all of our efforts are about. Nothing more, nothing less.
But Mr. Chairman, I think that you know that and I agree with you, the type of job that you just described also relies a lot on tourism and restaurants and that service economy. And they seem to be the last ones that are going to come out of this recession. People don't feel comfortable going back. So without unemployment insurance and the enhancement, I mean, how are these people going to make it?
So that's exactly I think that we're going to see lots and lots of people go back to work here in the next few months. We believe that. But the people who are in those parts of the service industry, tourism, of course, a big one, they're going to struggle. Many of them will struggle until the pandemic is really in the history books. And so that's going to be a problem. I think those people are going to need support. It may be difficult to find jobs in that industry at all. And I think we're going to need to support them and help them. As Congress did in the global financial crisis. I think as the years wore on, Congress, re-upped employment insurance a number of times just to keep people in their apartment, keep them there, not being evicted, not having to move into a shelter or move into a crowded place. And by the way, that's going to be a place where the disease can spread more quickly too. So I do think it's important that we provide that kind of help.
And I appreciate those words, and I hope you use your influence as you can to make sure that happens. I do have to ask this, though. One of the things that you said was this pandemic was it's over. Again, thank you very much for being here and continue to be the person you are. We have a lot of faith in you. Thank you.
Thank you, sir.
Thank you. Mr. Taylor, you're recognized for 5 minutes.
Madam Chair, can you hear me?
Yes, I can hear you.
Oh, terrific. Okay. Chair, appreciate you being here. We are all concerned about the economy as it goes to recover in jobs. Something that is of deep concern to me are the properties that have long-term mortgages where the lender has very little flexibility in their ability to forbear. We as a Congress saw the need to forbear, for lenders to forbear. The OCC provided guidance on March 13th, encouraging banks, which are the biggest of lenders in our economy, to forbear. We have given guidance to Fannie and Freddie to forbear. We have worked on legislation and financing, trying to help encourage forbearance. There are pockets of the economy where there is not the ability for the lenders to forbear at a level that is going to help them get to the other side. I'm specifically concerned about 3 subsectors in real estate: hospitality, student housing, and indoor retail, where it is going, because of the pandemic, they have no cash flow or very little cash flow. They cannot service their mortgages. They cannot service, they can't pay for the utilities. They can't pay for insurance. They can't pay their property taxes. I've been working with a lot of members on this committee and in Congress, Republican and Democrat, from all over the country, who share this concern. I perceive that absent action by this body, by Congress, by the federal government, we're going to see a wave of foreclosures beginning in the fall and going through next spring. That impact on jobs, I think, will be very material as people who are working for hotels, working in indoor retail, people who are student housing, where you have a university town that needs to have the housing to have to run the university, where those foreclosures are going to be very serious, particularly when they're foreclosed and the property itself is closed and the foreclosure does not have the expertise or the capital to reopen that business. So, assuming that you were to see things the way I see it, where there's a coming cataclysm here, do you have the statutory authority, as you and the Treasury, to open up the Main Street Lending Program or any of your other programs to provide lending authority to someone to then in turn help these properties that are in trouble that can't make their mortgage?
So there are limits, as I think you're referring to, in what we can do. We of course, there are lending powers, and they're very explicit in the law. We have to conclude that we're adequate. We have to have evidence that we're adequately secured, and we cannot lend to insolvent borrowers. So there are lines that we can't cross. Within that, we can take a lot of risk, the question is, for companies like that, you really hit the most affected sectors. We would have to be lending on some sort of an asset-based basis. That is something that we're looking at.
Well, I know you're looking at that, and my question again, it's a yes or no question. Can you do this without an act of Congress, or do we, Congress, need to take an act to give you the authority? Do you have the authority today? If you decided, hey, this is important, we got to do it, we can make these loans to the lower leverage, healthier properties to try to get them to the other side. They've got a liquidity crunch, right? If we get them to the other side, they'll be able to reemploy people, and communities will survive. There are whole communities that are going to die or be very badly impaired if they lose their hospitality space or lose shopping centers that are extremely important to that community. So the question, do you have the authority, or does Congress need to act to give you the authority?
My guess is, without seeing the numbers, if you're talking about low leverage situations where it really is just a liquidity problem, we have that authority. We do have that authority. It's in some of the cases, though, it's fully levered. Companies are fully levered.
Right. So if you look at collateralized mortgage-backed security loan in the hospitality space, the average leverage level is 63%. So that puts it, so normal real estate is normally levered, 15 to 17 times EBITDA, just to kind of put it in Main Street terms. That's well outside the range of what you can, what you have stated by rule that you can do. Again, my question is, do I have to pass a law so that you can then go lend into this space, or do you have the authority right now to say, you know what, there is a problem, we're going to go take action?
Yeah, I think some of the problems in that space will be better served by fiscal policy. I think we can probably reach some of them as well. So the answer might be both.
Okay, thank you. Yield back.
We have been listening to the Federal Reserve Chair. He is Jay Powell, testifying before the House Financial Services Committee, chaired by Maxine Waters of California. A wide-ranging discussion, really focusing on the state of the economy, how much longer we have to go before we see true recovery. The chair said we have a ways to go. We're not going to be reducing our balance sheet anytime soon. Also asking a lot about the details of what the Fed has done and what it can do, and also a discussion of what we can do for those less fortunate who have been hit hardest by the economic outcome from the pandemic and the shutting down of the economy. That does it for Balance of Power for today. I'm David Weston, and this is Bloomberg Radio.
Bloomberg Daybreak Asia. How should investors be positioning? We go there.
Talk about export numbers because they've been quite shocking. Korea, we saw Singapore, Japan too.
Tonight at 6 Eastern on Bloomberg Radio. Bloomberg, the world is listening.
This is the Bloomberg Green Business Report. Amazon is no longer alone in its climate efforts. The e-commerce giant made a vow back in September to become carbon neutral by 2040, and it invited other companies to join its pledge. Now, 3 other firms have signed on. Verizon Communications, the Indian software services company Infosys, and the British consumer products maker Reckitt Benckiser have committed to track and reduce their carbon emissions. All 3 have business relationships with Amazon. Amazon also announced it is signing on to the Science Based Targets Initiative, which sets standards and tracks carbon disclosure. Verizon and Reckitt Benckiser are already among the signatories, and Infosys belongs to a pact called RE100 that commits the company to power its operations through renewable resources. Amazon's climate pledge is the biggest environmental commitment to date from the company, which once lagged behind its competitors. Jeff Bellinger, Bloomberg Radio.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Business and finance have always held surprises, but this is brand new.
The move risks fueling more demonstrations and stokes concern that essential freedoms will be curbed.
Karen Muskow and Nathan Hager.
Chinese lawmakers approved national security legislation.
Expert navigation through uncharted territory.
Tell us the range of outcomes that we could see on that front.
Bloomberg Daybreak, weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Wednesday, June 17th, 2020. And Jason, I feel like in this environment, there's not a lot we can count on for certain. But one thing we can kind of count on is volatility. And we see that continuing to play out in the financial markets.
I thought you were going to say Uncle Jay Powell, back at it, back on the hill.
Well, we can count on Jay Powell. Jay Powell and the Fed.
JP and the Feds. Lending, not spending tour of 2020 continues with 2 days on Capitol Hill. We're going to hear about that. It feels like he is giving a little bit of support to the market. One thing we can also count on, tech stocks, apparently. So maybe it's like Jack and Jay will save us. I don't know. Jack Dorsey, Jay Powell.
All right. We got lots to talk about. No doubt about it. Over the next few hours, let's get you going.
You've already had it with
markets.
me. It's like 2:01.
I
You're
know.
like, good
it doesn't
Lord.
take much sometimes. All right. Let's get you going with the check on the trading day. Here is Charlie Pellet.
Count on me, Fed Chair Jay Powell. You heard him right here on Bloomberg Radio, urging Congress not to pull back too quickly on federal relief to households and small businesses amid increasing debate over whether to extend temporary programs that were put in place to shield them from the pandemic. We've got the Dow, the S&P, and NASDAQ all higher, as Jason mentioned. Tech stocks the standout. Let's look at NASDAQ, up 71 right now, higher by 0.7%. The NASDAQ 100 index up 0.9% in the year-to-date column on the NASDAQ 100 index, up 14.9%. S&P up 8. That's a gain of 0.3%. We've got the Dow up 19 now, higher by about 0.1%. Trading halt for Hertz Global Holdings, facing questions from the SEC over its plans to sell as much as $500 million worth of stock that may be worthless in the midst of the car rental company's bankruptcy. And work from home darling Zoom Video Communications says it's now considering a standalone product for kids and educators. Recapping stocks higher, the Dow, the S&P, and NASDAQ all advancing. 10-year yield 0.74%. Gold up 0.1%, 17.27 the ounce, and S&P up now by 9, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. You're listening to Bloomberg Business Week. This portion brought to you by Commonwealth Financial Network. For the sixth straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. Let's set the Business Week agenda, if we may. Carol, Vincent Signorello with us, global macro strategist for Bloomberg, joining us on the phone from White Plains. He's a contributor, of course, to the Macro Squawk Desk. Squawk is the real-time curated news, audio streamed directly through your Bloomberg terminal. Check it out at Squawk on your Launchpad. Dave Wilson, he's in New Jersey, our stocks editor, author of the chart and stock of the day. So, Dave, you heard Carol and I going back and forth a little bit. You heard the numbers from Charlie Pellet. What do you make of this trade?
Gosh, it's got a familiar look, doesn't it?
Yeah.
I mean, when you consider technology stocks are the best performers among the 11 main industry groups in the S&P 500, and then you see, the communication services category, which is Facebook and Google's owner Alphabet, and those kinds of companies also doing relatively well. Energy financial stocks, they're lower. I mean, it's just, it's hard to say anything other than, the trends that we've seen over time are reasserting themselves. I mean, it's not like, given all the volatility that we've had over the past few months, that they've necessarily kind of maintained their status. But it looks like, in a sense, that the market's sort of reverting to form, perhaps in the absence of a whole lot of corporate news, not much in the way of earnings. We're a month away from getting the second quarter results. You've got, as you mentioned, with Jay Powell testifying about Capitol Hill again. You've got expiration of futures and options coming up in a couple of days. I mean, there's just a lot to kind of get through. And for the moment, it looks like things are, to some extent, running in place, and the market's kind of reverting to type, with the tech stocks leading the way.
The hits just keep on coming. Vince Signorella, so how do you... Hello. So what are you hearing about our world? Because, man, it's a wacky one. Continues to be a wacky one.
This one, I have to tell you, this one's really surprising me. The news overnight and during the rest of the day today was not positive. And yet we're kind of just meandering along. We started out okay, then the Florida case count hit and we dropped, and now we're back to being marginally higher. I mean, see case counts rise in Florida, hospitalizations higher in Texas. Iran is saying they may have to have a lockdown. Brazil cases at record levels. You got geopolitical hotspots in Korea, between China and India.
And it's only Wednesday, Vince.
And it's only Wednesday, and nobody seems to really be bothered by it.
So what does that say to you? So what is that? Disconnect of investors in the market, or just a reminder that you could always make money?
I think I think what we're seeing today is just really just a little, it's been sloppy. I mean, volumes I think are a little on the low side. You might have retail still playing this a little bit, saying, okay, let's have a little fun. But in general, I don't see this as indicative of what any kind of a trend is. I think the market is waiting for the next event to grab hold of, and whether it be something like a blowout retail sales, an economic number that beats to drive us in a positive direction, or something on the negative side resulting from a COVID-19 headline in a negative direction. There needs to be a catalyst, and today I think the market's just taking a breather and looking for one.
And so, I don't know. I mean, when you talk to your trader buddies, Vince, I keep coming back to this idea. Carol and I were just talking about this in sort of a separate thing. It's like people are at home. They're trying to figure out what's going on. They're getting their data from different inputs, it feels like. I just wonder how much that has an effect on this.
Well, it does. I mean, a lot of the information people are getting is trickled down, so you're getting it a little late. I mean, one of the things that I thought was really interesting, we get that redhead out, that Texas virus rate hospitalizations surge 11% in 24 hours, and the market really took that badly. But then when you look at it, it was 277 people. So the news flow is not really indicative, I think, of what the market is moving toward. We're getting information, but we're getting it, I don't want to say poorly, but piecemeal and
drip,
and not in its real content, not in a real sense.
Yeah, good point.
All right, Dave Wilson, a quick tease of your chart of the day.
I like this one.
Well, Charlie mentioned Zoom video a few moments ago, Charlie Pellet, and I'll mention it again. I'll also talk about another company that's been around a little longer. General Electric.
I love this. I heard you talk about it on radio earlier. I sent it off to Paul Brennan. I'm like, this should actually be our bite of the day, but I'm glad it's the chart of the day.
Yeah, ZMVGE. I love it. All right, Dave Wilson, we'll talk to you at 3:30 Wall Street time. Vince Signorella, thank you so much. As always, coming up, my conversation that I had earlier via Bloomberg Live, a year ahead, with Jim Coulter. He had some things to say.
Well, he always does the year ahead for us, right? And obviously what he said at the end of last year, got to have a rethink when it comes to where we are right now and what it means.
Yeah, I was really, and we'll talk about it more later in the show, but I was grateful to him because I basically called him up and I said, remember all that stuff that he said? I'm guessing you're thinking some different stuff now. Why don't you come tell us about it? So yeah, it's about 45 minutes that we did, and it was fun. It was fun and very thought-provoking, to say the least.
And we know it's a name that our audience loves to hear from. And looking to give those that can't easily tap the financial world is Everett Sands, helping to give them a leg up. Founder and CEO of Lendistry. It's a fintech company. It focuses on small business, very small businesses, especially those owned by minorities, women, and veterans. So I'm looking forward to him. And then we've got Gary Miller, president of the University of Akron. So we've got quite a lineup.
Yeah, Akron, of course, is the alma mater of our buddy Joe Reese. Did you remember that?
I did not remember that.
Yeah.
Is Joe going to be listening?
He will be listening. I already texted him. All right. All that ahead. Let's do the Bloomberg Business Week Bite of the Day. This is one that I can get behind. One number that tells us a lot. Today's number, Carol, 14,000.
Yes. A petition to replace every Confederate statue in Tennessee with sculptures of Dolly Parton. Love that. Has racked up... I don't know about that. Has racked up over 14,000 signatures on change.org. It's not just the 74-year-old country legend's music career, which makes her an eligible replacement. The petition explains that she is a philanthropist and has dedicated her life to uniting Americans. As of Tuesday, that 5-day old petition, Jason, was less than 250 signatures away from reaching its 15,000 signature goal. So if you haven't signed it, sign it.
I'm all in, Dolly. All right, let's get some world and national headlines from Nancy Lyons down in D.C. Hey, Nance.
Hey, Jason. Republicans in the Senate are putting forward a package of police reforms that they're calling the Justice Act. Senator Tim Scott, the only black Republican senator, was in charge of its creation. He says all people, especially people of color, want a police force that works for everyone.
If you support America, you support restoring the confidence that communities of color have in institutions of authority. If you support America, that means you know that the overwhelming number of officers in this nation want to do their job, go home to their family. It is not a binary choice.
The Senate bill would establish an enhanced use of force database, would place restrictions on chokeholds, require new training, and create commissions to study law enforcement and race. Democrats say the Senate proposal doesn't go far enough. Their plan would make it easier to sue officers by limiting their qualified immunity. It would ban federal officers from using chokeholds, bar racial profiling, and end no-knock search warrants in drug cases. Votes on the House and Senate proposals could come as early as next week. Well, the U.S. has spent more than half of $3 trillion in economic rescue funds passed by Congress, with little of the oversight intended to ensure the money goes to the right places. 3 new oversight bodies are barely functional. A special inspector general was only recently sworn in. A congressional panel still lacks a chairman and staff. And President Trump quickly removed the official who is going to lead a separate accountability committee. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
In a world pandemic, wild theories abound.
This is beginning to percolate.
But there is one source that's expert, honest, and current. Bloomberg Surveillance with Tom Keene.
You try to avoid the losers.
Jonathan Farrow.
We've got the potential for the value trap.
And Lisa Abramowitz.
What's the risk for financial stability?
Bloomberg Surveillance. Weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. And now, watch us on Bloomberg Television.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
Bloomberg and Eaton Vance are proud to present a Boston Pop salute to our heroes. This Independence Day, the fireworks won't take place, but the orchestra's 4th of July tradition will continue. The program will feature guest artists and new music paying tribute to the heroes of the current health crisis and honoring the memories of those we have lost. Watch and listen July 4th starting at 8 p.m. Eastern, exclusively on Bloomberg Television and right here on Bloomberg Radio.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
At Honda, we believe in our ears. Listening can help solve some of life's biggest conundrums. For example, if a car breaks down and there's no one around to hear it, does it make a sound? The answer is yes. The new Jazz Hybrid will pinpoint your location automatically and send for help at the tap of a button. And with its personal assistant, you can find the answers to other conundrums like, where is a good vegan gluten-free pizza place with free parking? The new Honda Jazz. Hybrid and connected. Honda, the power of dreams. Connectivity subscription available in selected grades.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to an algorithm? Or to someone called Al? Or Derek? Or Sanjay? Or Sue? Or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hey, I'm Ali. How can I help?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Do want to begin with a headline out of California. COVID-19 cases there up 2.2% versus the 7-day average of 2%. California saw 87 additional deaths in a 24-hour period. Technology shares propelling equity markets higher for a fourth day after worrying increases in coronavirus cases whipsawed investors. Treasury yields mixed, the dollar mostly little changed. Here's where we stand. S&P 500 index up 10 now, a gain of 0.3%. The Dow's up 45, up 0.2. NASDAQ up 76. That is a gain of 0.8%. 10 years up 4/30 seconds with a yield of 0.73%. Gold little changed, up 33 cents the ounce at $17.26. West Texas Intermediate crude now down 0.6%, $38.15 a barrel. Recapping, S&P higher by 10 points, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you just heard Charlie say, California cases, the fresh numbers just out, up 2.2%. That's above the 7-day daily average. Let's talk about what's going on in California, and let's talk about what may happen going forward with the state of medicine. The perfect guest to talk about all of that is Dr. Peter Alperin. He is Vice President of Doximity, joining us on the phone from San Francisco. Dr. Alperin, really nice to have you here with us.
Thank you for having me.
So tell us about what's happening there in California, and specifically in San Francisco. I was talking with an executive out there earlier today, and he was sort of describing what was going on just sort of outside his door. What does it feel like on the ground, but maybe more importantly from your perspective as a doctor? What are you most worried about? What are you seeing?
Yeah, so great question, and thank you so much. In San Francisco, we've been remarkably doing pretty well. Things are pretty stable here, and I think the people and the citizens of San Francisco have taken the social distancing and the public health recommendations very, very seriously. People are really taking it to heart of wearing masks and keeping apart when they go outside. In my own personal practice, I have definitely seen some, a lot of anxiety around COVID, and we've been able to manage that. And, we've seen a big transition, as you probably are aware, towards patients really wanting to engage with us and engage with the practice through telehealth. And that's one of the reasons at Doximity we've developed a telehealth tool that all physicians can use.
And you're a pretty cool organization. I mean, you're a professional medical network for physicians. I think if I read it correctly, you've got a larger membership than the AMA, and you've got health tech leaders from a lot of institutions that are very familiar to our audience, whether it's the Cleveland Clinic, Stanford, Medscape. And so I do wonder what sticks with us. We've heard a lot, to be quite honest with you, Dr. Alperin, about telemedicine and how this is going to be the thing that really moves the needle going forward. At the same time, my doctors are like, please come into the office. So I do wonder, kind of what sticks with us ultimately, and what, in terms of disruption, the medical community, the medical systems have been very slow to change. So I'm just curious what really sticks with us.
Yeah. So the observation that you made about telehealth sort of blasting upon the scene is absolutely right. What we've really noticed is that obviously in April, when everything was very much shut down, patients were not able to come into the office, and therefore telehealth was really the only way that we could see patients. I do think, though, that this has been a watershed moment, and the fact is that patients like telehealth. It's convenient. It's effective, and I think what physicians have learned is that because patients like it, and they've been able to understand how to best incorporate it into their practice, and it does vary from specialty to specialty, you really can triage the types of patients that you need to see in the office versus the ones where a routine follow-up is something that you can do via telehealth. And that's why, through the dialer video to create this tool that is super easy to use, reliable, and secure, so that you can have those conversations with patients. And I do suspect that what's going to happen is that it's obviously going to come down from its peak, which was in some offices 50, 60, 70, 80%
right.
at the peak of the crisis. And I think it's going to decrease, though, but I think it's going to set at a new level. And that level, it's hard to tell. Anywhere from 15 to 25% is sort of what we're estimating is going to be the new normal for telehealth, which is a huge increase over where it was prior to the epidemic.
Well, and I do wonder, you talk about prior to the epidemic, and it's right, as you well know, we're still kind of in the midst of it, especially as we see, cases spiking, in other parts of the country. And I do wonder how telemedicine can kind of help us in terms of dealing whatever, I don't want to say second wave, because it's in many ways still the first wave, whatever kind of spikes we are, how it can help us and help more people get through this and maybe deal with it in a better way on a public health level. And also, it's got to be a part of that contact, tracing element too, and testing.
Yeah, no, absolutely right. So telehealth offers a huge number of advantages that I think are going to really be significant improvements in the way that we've delivered healthcare. First and foremost, you can see patients that otherwise may not have been able to make it into your office, regardless of the epidemic. So it's certainly more convenient from that perspective. You're also going to be able to have specialty care be delivered to areas where specialists maybe are a little bit more limited. So being able to have, say, a dermatologist provide services to a rural area where there really is not that level of specialty care is another huge advantage. And then, in terms of contact tracing, you're absolutely right. The ability to be able to see a patient routinely after they've been tested and tested positive, perhaps for COVID, is a critical part of the containment of the epidemic, is making sure that those people who have tested positive are able to be followed up appropriately, because as I think we all know by now, not everybody needs to be come into the hospital, and really, but if you do need to go, we definitely want to know, and telehealth is an integral part of that.
All right, we're going to continue our conversation with Dr. Peter Alperin in just a few minutes on the other side of some news. He is Vice President of Doximity, joining us on the phone from San Francisco. Lots to talk with him about as it relates to, and you alluded to it, second wave, vaccine,
first wave,
antibody tests, first wave, spiking, all these things that we're hearing about. I feel like we're starting to separate a little bit of the signal from the noise. I don't know if you saw that good story in the Wall Street Journal this morning about sort of what we've learned about the virus and how to prevent it. It was really interesting and good, and want to see if that jives with some of what Dr. Alperin is seeing there as he talks to his colleagues and talks to patients.
All right, we'll continue that conversation, no doubt about it. And, of course, watching the markets for you on this Wednesday, because we've been bouncing around a little bit. But right now we're just off our highs of the session, so some slight gains. Really tech continuing, as Jason mentioned at the top, the outperformer. You're listening to Bloomberg Business Week. Carol Massar, Jason Kelly. This is Bloomberg Radio.
This is a Bloomberg Money Minute. Buyers are tiptoeing back into the stock market after starting the day mostly on the sidelines. The Dow Jones Industrial Average is up 46. The S&P is up 11. The Nasdaq gaining 79. Fed Chair Jay Powell is urging Congress not to pull back too soon on relief to households and small businesses. In testimony before a House panel, Powell said the economy is at a critical phase and that support would be well placed. White-collar workers at Ford can keep their cars in the driveway for the rest of the year. The automaker is extending its work-from-home arrangement. It is the second time Ford has pushed back plans to bring salaried workers back to the office. Not so fast. Trading in Hertz shares has been halted after the SEC said it has questions about its planned stock sale. Hertz has been upfront in warning that the stock may end up worthless as it reorganizes in bankruptcy. No comment from the company. Larry Kofsky, Bloomberg Radio.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners. In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscription.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
If you want to find out what the best laptop is for streaming all your favourite box sets back to back while sitting in your garden, you could ask an algorithm, or someone called Al, or Sue, or Sanjay, or one of our other tech experts on Shop Live, Curry's PC World's online video call experience.
Hi, you're talking to Ali on Shop Live.
Isn't it nice to get advice from another human being? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
The IBM Flash storage solution can be broken down into 3 S's. Speed. Retrieve data fast. Scalability. Grow your storage as your business grows. Simplicity. Easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
Enjoy peace of mind with Ford. Relax and think about 3 months deferred payment on a new vehicle. Visualize an additional 3 months cash back. Breathe deeply and let 0% APR representative on selected vehicles wash over you. That's peace of mind from Ford. Current promotion ends 30th of June. Search Ford Peace of Mind for details.
Only available with Ford credit on selected finance plans. Exclusions and deposit restrictions may apply.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir, it's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Bloomberg Business Week on this Wednesday. We're going to continue our conversation with Dr. Peter Alperin of Doximity. It's interesting. I do think, you and I talk about it a lot. Medicine still has a lot of changes to get through, but I do feel like the virus is definitely pushing it along.
Absolutely, yeah. And it feels like a different world every day. We sort of start with some bad news, but there's a lot of debate out there about what happens next. All right, we'll get back to that conversation first. Let's get back to Charlie Pellet. He's got some headlines. Hey, Charlie.
I thank you very much. A healthy dose of optimism here with the Dow, the S&P, and NASDAQ all advancing. This update brought to you by SEI. Since its founding 50 years ago, SEI has provided investment managers and asset owners with robust infrastructure platforms and flexible outsourcing solutions. Go to SEIC.com/IMS. The Dow, the S&P, and NASDAQ all advancing with the S&P up 9 now at 3134. That is a gain of 0.3%. The Dow up 16, up just about 0.1%. NASDAQ up 80. That is a gain of 0.8%. 10-year up 430 seconds. The yield now 0.73%. Fed Chair Jay Powell urged Congress not to pull back too quickly on federal relief to households and small businesses amid increasing debate over whether to extend temporary programs that were put in place to shield them from the pandemic. There is optimism today about a low-cost, widely used anti-inflammatory drug